Stocks focused on the wind sector, focused on Heineken because of that that selling of shares in the markets. But more broadly, I suppose, just watching where we go as we wait for US futures, which still point lower.
They do, and this follows a big buy of the dip yesterday by US retail, which is interesting in light of what we've learnt over the last few days. Right, here we go. Tuesday session, about to start. Let's give you some numbers. Let's show you what is happening in terms of the opening trade. FTSE 100, we are anticipating a moderately positive start, up maybe 0.4%. We'll wait for that market to become open fully in just a moment as we climb off the original low. So we're up by a massive 0.1%, as is the Stock 600 this morning. Those two obviously are related. The IBEX is up by 0.4%. Yesterday, the CAC and the DAX had very little news going on, so it took a little while for those markets to get going. And I suspect the story is similar this morning. Not a lot of news. There you go. The DAX is up by 0.3%. The CAC is up by 0.2%. Not the most exciting of opens, but we have an open. It is positive this morning. Are we getting more action in the sectors, Chrissy?
An open that we get in 45 seconds is an open that I like, especially when it comes to some of the thematic stories that we've been keeping an eye on. The rate story, the defense story, all of that moving some of your biggest market movers to the upside. So banks, for example, are actually rallying quite a bit relative to some of the other sectors. Technology having a good day as well. And then baked in there is the defense sector. So Rheinmetall, of course, Anna, one of the key movers this morning.
Yeah, absolutely. So the defense sector very much in focus because of this sort of confusing picture, perhaps. As you pointed out at the top of the program, Guy, a lot of the takeaways, a lot of the analysis after yesterday's call between President Trump and President Putin, and a lot of the aftermath of his press conference, President Trump's press conference, seems to be this conclusion that, okay, this is the US stepping away, even if it seems kind of counterintuitive to say that after they just spent 2 hours on the phone trying to deal with this situation with the Russian leader.
I don't think I've ever had a 2-hour phone conversation in my entire life. I wonder what they talked about. Vestas is up very nicely this morning. You are seeing Vestas up by 4%, circa 4%. So you are seeing a read across from this wind story. You've also got EDP rising as well. So there's a more positive tailwind to the wind sector this morning.
Very good, very nice.
I thought about that one.
He was waiting for us to respond.
Yes.
I get no love.
You're proud of yourself today.
In the morning. Anyway, so that's what we're seeing basically happening. There's a few XTs in the market this morning. Heineken is down a little bit, 2.68% this morning, Anna, to the story that you were referencing a little bit earlier on as well.
We should talk about UBS for a moment. It is one of your biggest, I think your biggest downside index contributor, biggest weight, I should say, down about 1.3%. This comes after headlines that UBS is due to lose their first round in the fight against the Swiss capital hike. We do know that the Swiss have been very clear about not moving down their capital requirements, whereas some of the other European regions have suggested they might follow suit, given that the U.S. is doing that as well. UBS, of course, vouching for pulling down on that capital hike. They've lost that battle, at least it seems, and the stock reflecting that this morning. It is one of your biggest high-volume movers to the downside. Let's bring in a true expert about how to navigate these markets. Elise Boudoir joins us around the table, head of EMEA Research over at Citigroup. Elise, a pleasure to have you on the program. We're trying to work out what the investment theme of today is, as we're on a bit of a hiatus when it comes to trade deals, when it comes to even geopolitics and the developments there. How does concerns around deficits, whether it's in Europe or the United States or in Japan, weigh into the equity story?
Well, good morning. I mean, Kriti, when we speak with investors at Citi, what we find at the moment is we're oscillating between macro data, hard data, and obviously some of the news flow. And the news flow, can be, as we've seen, politically driven, and then we go back to the hard data, and investors are really looking at that. So I think at the moment we are, the big question we're getting. I'm head of European research, so obviously I'm getting what's next for the trade in Europe. Europe is up 10%. US is flat in terms of performance year to date. And obviously it's what's next for the European trade and the diversification. And that question, is very important. And I think we remain positive on Europe. We continue to recommend diversification, into the European market. We're neutral on the US. But I think, that comes with the perspective that, it will be a bumpy ride, and there'll be moments where the macro data will come and interfere.
I'm going to put my Guy Johnson hat on today and steal his question, if I can. Does diversification? Yes, I know, but I'm going to.
I wonder what a Guy Johnson hat looks like, but that's a whole different argument.
I'll do my best impression. What does the diversification trade pay at the moment, when historically diversifying hasn't been a lucrative move?
Mm-hmm. Absolutely, and when we were in the US, Kriti, that was the biggest question. When we met investors, I did a US trip about 2-3 weeks ago, and then another one which was in November, and the mood was completely different. In November, everyone was like, "We've heard this before. We've been there, for a couple of years trying to do this trade." I think what's changed, at the time, in December, when we put on that perspective and recommended diversification, we were really looking at the extreme bearish positioning. Since then, we've seen a lot of inflows. In fact, probably, if you look at the outflows out of Europe post the Ukraine war start, we probably have only reversed about 10% of that with the inflows we've seen. So we believe there's still inflows possibility, but our stance and our next leg for this diversification really is more around structural changes. And the structural changes we've seen, notably around the stimulus that we might see with defense, with infrastructure, that actually is really what's behind our next leg for the journey.
So, Elisa, the story around defense. And it's interesting to see how the sector is responding or not to the latest news flow. But is it right then that the story around defence is about government spending that's committed, about Germany spending more, the rest of Europe spending more, and it's not necessarily about trading the news lines around Ukraine specifically? Because just today we see quite mixed reaction from defence names to the latest news lines.
And it's always nuanced. And I anticipate today, when I go back to the desk, the questions will be around, is this negative for Europe because we thought the end of the war in Ukraine was a positive catalyst in the equity story? Or actually, is this a next catalyst for Europe to come together? And I think what we've seen, the incremental buyers for Europe, have to come from the US. So I was listening with interest about the retail, buying the dip in the US. Obviously for Europe, the question is the incremental buyer has to come from the US. A lot of the questions we've been getting were around, does the UK get on better with the rest of Europe? And we've seen positive news flow around that. So your question around Ukraine and defense, I do believe that actually at the moment, it is potentially, and it will be seen by the market eventually, potentially as a catalyst for Europe to come together more.
Yes.
We've seen this in the past. It's actually now, it will be almost like echoing what we've seen post-Munich.
Yes. So I suppose the question then is, do defence stocks move in the same direction as European stocks broadly, or do they move in the opposite direction?
Well, we've been recommending, at the moment, given the number of downgrades we've seen, we're really recommending, we're sort of dipping a toe into cyclicality in Europe, into beaten up cyclicality. So we are really overweight autos, and we're also overweight tech. So beaten up cyclicality in value, autos, beaten up cyclicality in growth tech. When it comes to defense, obviously we've seen quite a big re-rating, but we continue to anticipate that to happen. And I think here is yet another catalyst because we're likely to see more drive. And I was listening to President Macron opening speech at the Choose France event, and essentially, he's talking about execution being key, and I think that's what people want to see. But we're likely to see definitely more rhetoric around investment, around these defense names.
The marginal buyer needs to come from the United States. Let's just talk about that for a minute. US investors, dollar investors, okay, in the DAX year to date are up 30%. 30% in dollar terms. How big a factor is the dollar? Like, what do they need to see other than there's 30% flashing on my screen in front of me right now to get them interested? Like, the numbers are, the DAX is up quite nicely anyway. For a dollar investor, it's up even more. These are amazing numbers that are being posted by Europe for a US investor right now.
And I think, we've been hearing some of that, and it's been, it's been a very, very important trade. I mean, investors in the MDAX are even, probably, because they've essentially played the pure German investment. So we had a lot of questions on MDAX. Now, I'll temper it down because I always like to be a little bit nuanced. I think there's always this tendency to be, obviously in the US, the issue for the incremental buyer to come, particularly institutional buyers, is liquidity. And we must remember that Europe is, overall a smaller market. So to find liquidity, for example, in the MDAX or, in the DAX, obviously, those are some of the questions we were getting. But interestingly, not questions on fundamental, Guy.
Okay, the MDAX is up 28% for a dollar investor, which is still a fairly decent number. But how important is the dollar going to be if we continue to see the dollar? One of the things we're seeing at the moment is U.S. investors piling back into equities, but we're not seeing the bid in the dollar. The dollar bid has not come back. The dollar kind of initially went up a little bit after we saw the announcement last Monday, but then has come back down again. If we continue to see a weakening of the dollar, how much of a catalyst could that be? How important is that going to be in terms of returns for U.S. investors into Europe, but also kind of on the other side of the fence, the other side of the coin, for European investors into the United States? Does it keep European investors at home as well, because the dollar's working against them now in terms of the investment story that they're working with?
So I think when we're socializing the diversification, actually, coming back to the dollar, in fact, some of the biggest question we get is, but what if the dollar is still, continues to weaken? Because actually, for portions of the European market, it's not necessarily a positive, actually.
Okay, because the companies make returns out of the US.
Exactly right. I think the way we look at it for the European market is it's a 50-50. 50% benefit, 50% don't,
but
right?
That cancels each other out.
So it almost, it depends where you're choosing to invest within the European market, obviously. It's not necessarily an all blanket negative or positive. What we expect is the dollar to continue to weaken. So we have, we have built into our assumptions, a continued weakening of the dollar. I think, in terms of the US investor, obviously, that's something to take into account, and we can't see how it works necessarily against us. But I think it depends which sector you might be invested in.
Okay, so more domestically focused sectors get a bigger advantage.
Exactly.
Thanks for stopping by to see us. Elise Baudouin, Head of EMEA Research, joining us over from Citi. Okay, let's talk about what is happening in the market this morning, some of the bigger stocks. This is what the picture looks like. We have Ferrari unchanged, not moving, parked, I guess we could call Ferrari this morning. ASML, though, is catching a little bit of a bid. Schneider's up a little bit. Nestle's up. There's no clear and obvious theme there in what is happening. It is interesting that Novo is catching a little bit more of a bid and luxury is selling off. But actually, that's not where the action is this morning. I think the wind sector is quite interesting. Defence looks quite interesting this morning. There's HSBC, not HSBC, Heineken, wrong H, to think about as well. Let's talk about the individual moves with Joe.
So the wind sector, really the place to start, Guy, as you mentioned there. Take a look at this move that we're seeing in Ørsted, up 12% at the moment. Remember, news overnight of the US allowing this project in New York, this offshore wind project, to resume, and that is a real surprise for that market at the moment. Actually, the move in Ørsted, much bigger than Equinor, the one that's actually running the project, because they've, of course, got a big oil business as well. So potentially people reading this as positive for Ørsted. Also positive for Vestas as well. SSE ticking a little bit higher, a bit of wind exposure there as well. But really, Ørsted, the big mover there over in Copenhagen, up 12% now. Big one for that one. Then in terms of defence, the takeaway on this story, of course, on potentially Ukraine and Russia. Is it positive? Is it negative for defence spending? A little bit unclear, but broadly, most of the defence stocks actually moving higher. Rheinmetall, Leonardo as well. Saab does look a little bit lower, but there was an executive share sale on that one, so I think that one potentially bucking the trend, but mostly actually defence reacting positively potentially to the news from Trump overnight. Then we've got Heineken Holding, of course, placed at a discount from the Mexican company FEMSA. That's the company that bottles Coca-Cola in Mexico and also owns retail stores as well. Offloading Heineken stock at a discount, Heineken Holding. We knew they were going to do that, so that stock slipping a little bit, 2% down for that one. Then in terms of Vodafone, it was a little bit soft on that one, but that was potentially already known. We did see weakness in the German market in particular, one of their biggest markets for the UK company. The stock actually opened a little bit weaker at the open of trading here in London, but actually coming up, we're now positive on Vodafone, up around 0.4%, but down around 50% over the past couple of years for that stock. A big decline there. Then UBS, losing that potential first step in their capital issue with the Swiss government. Now the company potentially going to have $25 billion of capital on the books if they don't get this resolved, and that is taken negatively today. So UBS coming down 1.5% at the moment in Zurich. And then finally, to finish on Greggs, they were talking about some viral products on TikTok in their statement around some sort of cold drinks that they said did really well on social media. But that stock up 6%. It's another stock that has suffered a lot over the past few years, but coming up, the like-for-like sales actually showing a little bit of an improvement in the latest quarter, and therefore the stock coming up. Greggs rising 6% in London this morning.
Thank you very much, Joe Easton, with the essential Greggs news and other news from the equities universe. Coming up on the programme, Jamie Dimon cautious against complacency. He's cautioning everyone about complacency in the face of a mounting range of risks. More on the JP Morgan CEO's comments next. This is Bloomberg.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
The Qatar Economic Forum is underway. You're looking at live pictures coming from Doha. You are currently looking at pictures of course, the Qatari Prime Minister, who is delivering the opening remarks. We open the event, but we've got some great guests lined up coming from there a little bit later on, including Elon Musk. Very much looking forward to that conversation when it happens, coming to us from QEF a little later.
Yeah, absolutely. So the Qatari Prime Minister talking about the geopolitical situation and specifically the Middle East and Gaza. We'll continue to monitor, of course, all of the news lines coming out of that event. And we'll be back with the Qatari Prime Minister to hear more from him shortly. Now, in the meantime, let's talk about some of the warnings we've had coming out of Wall Street. JP Morgan CEO Jamie Dimon is warning against complacency at the banking giant's Investor Day, where he cited risks ranging from stagflation to geopolitics. Dimon said he also sees what he calls bad risk in buying credit.
Personally, and I don't like making forecasts, stuff like that, I am not a buyer of credit today. Okay, I think credit today is a bad risk. I think that people who haven't been through major downturns are missing the point about what can happen in credit.
Charlie Wells is here with the latest. And Charlie, you were listening to what Jamie Dimon had to say. Walk us through his comments then. What are his warnings?
Well, Anna, he had serious kind of head coach energy, kind of coming in at halftime and saying, look, you guys have, had it tough. You're tied now. Don't get ahead of yourselves. Don't lose it here, right? And so that complacency theme coming through on all of these elements on that credit side, kind of talking about tight spreads and about what, bad things can happen on that front. Talking about markets, this is where that kind of tie theme comes through, where he talked about, a 10% dip, a 10% recovery, but don't forget what happened in between all of that stuff. These tariffs happened. They're lower now, but still, as he said, quote, extreme. And then he even talked about complacency in regards to central banks, where we've got these deficits across the globe, central banks kind of feeling as if they're omnipotent, but in some ways, that sentiment is complacent as well.
It's fascinating one, because with all that volatility, aren't the banks supposed to be the ones that are both most affected but also least affected in terms of the trading volatility, but perhaps not the deal stuff? Talk to us about the business setup here, because we also know that JP Morgan was front and center in terms of their reserves, but maybe not big enough reserves. What do we know about the business?
Yeah, so Curdy, you kind of got the sense yesterday where there was a little bit of drama. So basically management talking about how, they're well positioned to handle turbulence, but then they started talking about investment banking fees and about how in the second quarter there is a world where they're down in the mid-teens from the year prior. This actually sent their share price down. It ended up recovering, but it was pretty dramatic. It ended up recovering as they started talking about, kind of a good outlook for the markets business. Marianne Lake talking about how, consumer sentiment is bad, but they're just not seeing changes in that behavior. And so again, this kind of, position for turbulence without, with a little bit of drama in there as well.
In terms of what is happening at the bank, what do we learn kind of broadly about that picture?
Okay, well, look, Mike Mayo put it point blank to Dimon yesterday. When are you stepping down as CEO? And this is something that...
He's never heard that question before.
No, never. But this is something that investors just want to know more about. And if you look at yesterday, it was pretty interesting because you saw a lot of these potential contenders, Marianne Lake on the community banking side, co-heads of CIB, Troy Rohrbach, and also Doug Petno. A little bit of an audition here, right? So these are potential contenders. You saw them kind of out front, kind of practicing in a way, kind of getting a sense of what they look like. I think that was a big takeaway too. But Dimon, of course, saying no change as far as succession.
Right, okay, yeah, important to say that. I like that you dubbed it head coach energy. He also came across as somebody who's wanting to, show off the credentials of someone who's been on Wall Street as long as he has. Certainly talking about credit markets, suggesting that you needed to see a few cycles to really see the risks.
That's exactly right. I mean, he was really kind of just basically saying, do not get ahead of yourselves here. Do not let the optimism that you're feeling right now kind of cloud your judgment, cloud maybe what you, as maybe younger participants, haven't seen. And this just felt kind of like the relief rally reality check that I think he wanted to give everybody.
All right, Bloomberg's Charlie Wells watching the JP Morgan story for us and everything from what that business holds, the warnings coming out of it, and of course the succession battle as well. We thank you so much. Let's turn our focus from the banking sector to the tech sector because the chief operating officer of OpenAI has played down the threat artificial intelligence poses to jobs. Brad Lightcap, who recently took over day-to-day running of the company, spoke exclusively to our very own Tom McKenzie. He asked whether AI will ultimately cap job growth.
I don't think so. And I think that's because the world is actually gated on resources, on productivity, right? I think if you talk to any enterprise, and we talk to companies all the time, I ask them, what's their number one concern for how they think about the next 5 years of investment? And oftentimes one of the things we hear is, I can't hire enough software engineers. We live in a digital economy. I know I have to transition my product, my services, my business processes into more software-based approaches, but I don't have enough people, right? So how do you now bring a tool to the market that enables a software engineer to be 50% more productive, 2x more productive, right? This is an incredible thing. And so that's actually kind of the way we look at it, is to the extent you can enhance output, right? Then it really is just on the company, the firm, the individual to figure out ways to do new things. And so job growth, the job question will inevitably be different. Like jobs will change, but I don't think there's reason to believe that jobs will go away.
Stargate is being built out in the US, obviously with your partners. What about sovereign AI? What about Stargates outside of the US? Are you in conversations with governments around the world about building out Stargates outside of the US? What does that conversation look like? How many different countries are you talking to at this point?
Well, we see this incredible demand, not only from individuals, not only from companies, but even from governments for how do we start to bring AI kind of into our country, right, into our kind of national consciousness and have it penetrate in a way that, accrues benefit to the average person. That was really the big initiative behind our recently launched OpenAI for Countries, was how do we actually work with governments to design some of these programs? And that includes infrastructure, it includes deploying the models, it includes figuring out how to integrate government services, for example, into ways that would be more AI-powered, AI-native. And it includes investment in the economies of these countries to enable a startup ecosystem that we see thriving.
Which countries are on your list right now?
Well, we right now, we're very early. We announced this very recently, but we think it's going to be a scalable program.
Brad Lightcap there, the COO of OpenAI, speaking exclusively to our very own Tom McKenzie. I'm going to leave you with some pictures here from Doha, where the opening ceremony for the Qatar Economic Forum is underway. The Qatari Prime Minister delivering his opening remarks. We, of course, will have live coverage there, covering all sorts of topics, from geopolitics to technology to, of course, perhaps the tariff threat as well.
Yes, he started the conversation talking very much about geopolitics and foreign policy within the region. He is also the foreign minister for Qatar, and so that's certainly one area we will continue to focus on as we bring coverage. But we were just talking there about tech with OpenAI. Well, tech will also be a big theme of this event. We're going to be hearing from Elon Musk, for example, a little bit later.
We're going to hear from Elon Musk a little bit later. Can I just take the conversation, though, back to what is happening in Washington at the moment, which is a conversation that is increasingly concerned about outsourcing of AI, etc., to the Middle East and some of the deals that have been done by President Trump. So we will focus on that as well. Anyway, some great coverage coming up out of the Qatar Economic Forum. We will be back there very shortly as well. Looking forward to the continuing conversations. This is Bloomberg.
case you missed it, on Bloomberg Open Interest, how much would it cost to bring production here, Rebecca? I mean, what kind of upcharge would you be looking at?
There is no handbag infrastructure in America anymore besides a couple of small factories in New York City. So not only would we have to build a factory that could make the amount of units we're trying to make, but we'd have to bring back hardware manufacturing, bring back tanning and leather. I mean, these are all things that are purchased overseas and assembled. You know, if you want this to really work, give us grants to build factories, give us several years of tariff breaks in order to make these things happen, and then we'd love to make in America. It just right now, if I were to switch everything to America, my price would double, and my consumer is not here for that. As small businesses doing under $50 million, you know, keep us alive. We are employing millions of people collectively and affecting livelihoods across the U.S.
Don't miss Open Interest live weekdays.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
Welcome back to the program. Let's go back to the Qatar Economic Forum in Doha, where the nation's prime minister is in conversation with Bloomberg Horizons anchor Jemana Besetcha. They're talking about global supply chains and technology.
Is making sure that the situation in this region remain stabilized. And we have seen what a delicate period that we are going through in that region, whether it's on their talks, on the U.S. talks with Iran, or with the situation in Gaza and the changes that happened in Syria. And we are hoping that these kind of engagements will lead us to a point where we can have all these conflicts settled and hopefully being more focused on the prosperity of the region.
President Trump has been labeled a transactional president. He certainly likes to do deals. He's written a book about the art of the deal, and he likes things of value, especially if they come free. I want to ask you about the gift of this Boeing jet that Qatar want to give to the president to use as interim Air Force One. It's been met with a lot of controversy back home. What was the purpose? What is the purpose of this gift? And is it, as some critics say, an opportunity for Qatar to gain influence with this administration?
Well, look, actually, you know, we have seen that there was a lot of, you know, controversy that's being created out of this, what I call it an exchange between two countries. And basically, the relationship that we have between Qatar and the United States is a very institutional relationship, and it witnessed different administration, and the institutional relationship remain very strong and at the backbone of this partnership. The plain story is a Ministry of Defense to Department of Defense transaction, which is basically done in full transparency and very legally, and it's part of the cooperation that we've been always doing together for decades. For example, the airlifting in Afghanistan is something that we have almost 80% of that done by our air forces. The security deployment of United States during the World Cup to support our efforts was done by the United States, and I see it as a normal, a normal thing that happens between allies. And basically, I don't know why people they are thinking about it, that this is considered as a bribery or considered as something that Qatar wants to buy an influence with this administration. I don't see any, honestly, valid reason for that. And I believe that there is a huge issue in misconception or, unfortunately, some spoiler who are trying to portray Qatar as a country that it tries to buy its way. And I believe if you look at the track record, at least for the last 10 years, whenever is some scoop coming out in the media and trying to put Qatar under a spotlight, that Qatar is bribing to get the World Cup, or Qatar is bribing the EU Parliament, or whatever, until like the end, Qatar is trying to bribe the Prime Minister of Israel. I'm sure that, it does tell you something, that for the last 10 years, none of these cases has stand or had any proof that Qatar has done anything wrong. We are a country that would like to have strong partnership and strong friendship, and anything that we provide to any country, it's provided out of respect for this partnership, and it's a two-way relationship. It's mutually beneficial for Qatar and for the United States, and I believe everybody acknowledges this. I think that we need to overcome this stereotype of seeing Qatar as a small Arab nation because it's gas rich. It cannot find its way without buying it with money. It's really a misconception that hurts a lot, not our reputation, but the reputation also of other countries and the institutions.
Is the controversy worth it, though, if it means that there's going to be further congressional scrutiny of all of Qatar's dealings now with the U.S.?
Well, there is actually nothing been done by us under the table, or like we are trying to do like a covert operation. It's a Ministry of Defense to Department of Defense. There is a proper legal review is now conducted between the two departments, and nothing has happened yet, actually. And our intention is to have a very clear exchange that the U.S. is in need for to accelerate, a temporary Air Force One. Qatar has the ability to provide this. We stepped up, and basically a lot of nations has gifted the U.S. Many things. I am not comparing that to the Statue of Liberty, but I don't know if this is sounded a little bit maybe strange for the U.S. because it's coming from a small Arab nation. I think that this has played some way a factor in this, but I'm hoping that people in the United States and even the politicians over there, they look at us as a friend, as a partner, as a reliable partner, that we've been always there for the U.S. whenever we were needed, whether it's in the war against terror, whether it's in freeing American hostages from all around the world. It's not something that we've been doing to buy an influence, but this is a duty on us as a partner, as an ally of the United States. And as there is a duty for the United States toward Qatar.
I want to turn to regional geopolitics. Yesterday, the Israeli Prime Minister says that Israel are now carrying out operations with the purpose of taking over the Gaza Strip. They will carry out an unprecedented attack on Hamas. That is a quote. The war is clearly entering into a new phase after a ceasefire that was negotiated earlier this year. Qatar played a pivotal role in that. It lapsed in March. The death toll continues to go up. There's still what's thought to be 20 hostages still alive in the Gaza Strip. There's a humanitarian crisis going on there. What hope is there now for a lasting ceasefire, Your Excellency?
Well, it's unfortunate that we've been seeing the situation unfolding in this way, and it's becoming very frustrating for everyone, and especially for us here in Qatar. We've been there from the beginning, trying to mediate and trying to get to a deal where it alleviates the suffering of the Palestinian people in Gaza and freeing the hostages and bringing them back to their family, and trying to bring a path that will create a peaceful environment and security for both people. And that's basically what we were aiming. And what I think that the last year and a half now has shown you that the only way forward is through negotiations. And unfortunately that sometimes, or many of the times, these negotiations being sabotaged by political games with a very that states very clearly that this deal should include multiple phases, that we have to do everything we can to avoid to return to the war, and ensuring that all the hostages will be freed and there is a withdrawal from Gaza Strip, and there is a clear way forward for the Gazans people to alleviate their situation. This deal has collapsed on 2nd of March, and we have seen how the situation has been unfolding since then, and the blockade on Gaza for now more than 60 days. And we are hearing also some irresponsible statements about the humanitarian situation over there, about the way of distributing these aids and distributing food in form of meals and calculated calories for pre-qualified and pre-screened people. I think all these things that are happening has been unprecedented in our world today, and it shouldn't be acceptable for the international community. Yes, yet we have seen that unfortunately the Israeli government is carrying it out with impunity. Now we continue our efforts despite everything and every attempt to sabotage our efforts and try to also blackmail us and continuing attacking us, while we were the only country that's helping together with Egypt and United States. And we have this is just making us more determined to bring stability to the region, to end the war in Gaza, to free all the hostages and to bring them back to their family, and to provide security for both people. The rounds of negotiations that took place in Doha in the past couple of weeks unfortunately didn't lead us anywhere yet, because there is a fundamental gap between the two parties, which is one party is looking for a partial deal that might or have the possibility to lead to a comprehensive deal, and the other party is looking just for one-off deal and to end the war and to get all the hostages out. And we couldn't bridge this fundamental gap with whatever proposals we have provided, given the past experience of the first deal that it collapsed. And basically we are stuck in a situation that if this operation is starting, is just going to postpone the diplomatic conclusion of the war, which is will end only diplomatically from our point of view, and will just cost us a death toll on the Palestinian side and also on the hostages side. Just, I wanted to add one very important point to this. The delicacy of that situation in the region right now is critical. And basically, we have seen that the continuation of this campaign and this way and this behavior, and it's not only in Gaza, but Gaza, West Bank, Lebanon, Syria, is something becoming unbearable. Yet you have seen that all of us as governments, as countries, we are calling for peace, we are calling for peaceful resolutions, and there is nothing is stopping this kind of behavior. That will only add anger to the people in that region. This will add legitimacy for non-state actors, and is just going to fuel the narrative of extremism and terrorism.
In President Trump's speech last week in Riyadh, he talks about the birth of a new Middle East, the economic transformation, and also the Gulf states playing an increasingly influential diplomatic and mediation role, and the prospect of regional stability. Can there actually be regional stability in the absence of a solution to the Palestinian and Israeli conflict that has been going on for decades?
Well, we believe that this conflict is a core for the regional stability, and we hope that there will be a chance sometime soon. It requires a strong leadership from the Palestinian side, from the Arab side, and from the Israeli side, because there will never be a deal without a compromises between all the parties, that ensuring that there are conditions that can be created for the people to coexist together. This region has been, for centuries, with a beautiful social fabric that has different backgrounds and different ethnicity and different religions. Unfortunately, it's been drained with these ancient wars and proxies that evolved over the last few decades. I cannot recall since I was born that there was a moment of stability in the region. When we talk about the overall, we are blessed that the GCC was protected, except during Iraq war. But since we grew up on just conflicts after another after another.
We've got a couple of minutes, but I do want to ask you, because you were in Tehran over the weekend, how likely is it that you think we will get to an Iran?
We are going to leave that conversation there. Qatar's Prime Minister.
I believe there is a positive momentum. We had a very...
Speaking with Bloomberg Horizons anchor Jamala Basetchi, of course, the Qatari government is the underwriter of the Qatar Economic Forum, which is very much powered, though, by Bloomberg. We will be continuing our conversation surrounding what is going on in Doha. We are going to have a conversation a little bit later on. Michelle Hussein is going to be in conversation with the Tesla CEO Elon Musk. If you'd like to note that in your diary, it will be happening at 2 p.m. UK time. We'll also be hearing from the head of the Qatar Investment Authority. JP Morgan Chase's Mary Erdenes is going to be joining us a little bit as well. A great conversation. It's always fascinating to listen to. I want to turn our attention to another summit that was held yesterday in France. The French President, Emmanuel Macron, touting more than 40 billion euros worth of deals coming out in terms of foreign investment from the annual gathering with business leaders that we now call Choose France. Most of these deals were announced last night at the summit. Bruno Bonnell, who oversees the France 2030 National Investment Plan, joins us now to discuss. Was this a success? Where is France in terms of where it wants to be and where the president would like it to be versus the reality of where it is? There's obviously been a lot of criticism of France over the last few years in terms of labour standards and what's been going on in terms of the economy. Was last night a reset for the French president and the French economy?
Well, first of all, it was a success because if you look at the amount of investment, 40, as you said, 40 billion announced last night versus 2 billion in 2017, definitely we are growing every year. For the 6th consecutive year, France is the most attractive country in Europe for foreign investment. So there is no doubt about the success of it. And all the criticism are concerning the logical of business. Sometimes some deals don't go through. We all know this. But the percentage of those are really small compared to the ones that are really going through. So I believe that we're seeing the power of the economical politic of France, which is a mix of stabilization of the economy, simplification, which is still a problem, and of course, we can see that we'll need some more protection. So the idea of investing in Europe and in France is going to be critical for a lot of foreign companies.
Is the political scene in France stable enough now to deliver the kind of investment that you're looking for?
You know, if I look at the worldwide, I mean, we just heard the person from Qatar. I mean, the big concern of the world is the political instability, with some erratic decision made by great leaders, with some, of course, desperate conflict everywhere. So in this kind of mist, I think that Europe and France more specifically is probably a good deal. Because even though we do have our kind of Gallic issues where we fight all the time, we all agree that France has to stay one of the leading countries for investment in the coming years. So instead of being short-sighted and seeing just like the kind of almost daily political issues, on the long term, decarbonized energy, solid implantation of allocation, for companies and for factories, a lot of talent, massive pool of talent. So all those things are to be considered as solid and able to reinsure any investment in France.
Bruno, it's Creedy in London. Let's talk about some of the mechanisms that perhaps other countries are using to generate that kind of investment in the long term. Things like tax cuts. It's a very popular theme in the States, dealing with the same deficit issues that France is dealing with as well. Subsidization, very much on the table. You talk about the talent pool. A big part of that is things like other incentives and credits. What more can France do, perhaps using some of those mechanisms to bring that investment onto French territory?
So first of all, we do have the plan I'm in charge of, which is 54 billion euros of investment in innovation. And this can go through subsidies, through loans, or through capital. That's really a kind of de-risking operation that's worth it. And talking about all the announcement on the tax cut, looking at the changes in the US, in kind of the mentality and the stability of the government right now, I would probably wonder if they're going to last. So the idea that we have a long-term and stable initiative with the support of this company and the talent, as I said before, is probably an interesting advantage compared to some other countries. That's how I would phrase it.
Bruno, thinking about competition for those investment dollars or those investment euros, we see that Germany is, of course, embarking on a big investment drive that covers infrastructure, defense, and there seems to be some excitement from international investors about that prospect. Do you fear that France, in the eyes of international investors, could be sidelined by those German opportunities?
Definitely, I think that the decisions that Germany is making right now is interesting because they make it with a strong will of reestablishing a strong collaboration between France and Germany. So I think that there is a benefit to each other to share experiences. We went through a very hard time in France with deindustrialization, a lot of problem with refocusing of technologies on specific sectors. Of course, Germany right now is facing all this energy crisis due to the Russian gas and the choices, the energy choices back in the beginning of the century. So I would really consider that sharing our experiences and power is probably the way. The same way we did France 2030 plan to reestablish some massive strategic sectors at the French level, Europe should probably focus, as Mr. Draghi says, on reestablishing European power on those sectors by combining talent, strengths, and budget.
Okay, so some focus there on the sectors that really matter for the future for Europe. What about the expectations we should have about the trade deal between Europe and the United States? Is there a conversation in France that goes along the lines of, look, 10% seems to be a good outcome for other countries, maybe we need to accept we'll end up with 10% tariffs, or do you think Europe should hold its nerve and go for lower tariffs than that?
Well, in a negotiation, it takes two to tango. So the whole thing is what kind of steps, what are the next step that U.S. are going to take? Because if we start, accepting like short-term deals, nothing guarantees that in a couple of months or weeks or days, their attitude in the U.S. will be another, once more, will change again. So I would probably go sector by sector and see what are the sectors in need of, close deals and remain some other deal open because the competition is still on, and there is a necessity for the U.S. to accept some products that are coming from other countries. So I believe that the negotiation is actually just beginning, and setting some dates and saying take it or leave it. I don't know the art of the deal so well, but I'm telling you, it's not the way that diplomatic deal is going to play.
Okay, thank you very much, France's Secretary General for Investment, Bruno Bonnell. Thank you very much for joining us there and thinking about any trade deal between Europe and the United States. Well, energy might be a feature. One country that has been enjoying supplying energy to Europe of late in the shape of liquefied natural gas is Qatar, of course. The Qatar Economic Forum in Doha is continuing, where the Qatari energy minister and the CEO of ConocoPhillips are speaking on a panel on global energy security. It's moderated by Bloomberg's Francine Lacroix. Let's listen in.
Sure that we continuously can have good profits. Regarding Riyadh Airline, I think we're very happy for our brothers and colleagues in Saudi Arabia that they are embarking on this expansion in the airline business. It's a huge country, Saudi Arabia, whether it's size of the country or size of population, and I think it's overdue to have additional airlines and airline products in Saudi Arabia, and if there's anything that we can do to support Saudi Arabia from Qatar Airways, we'd be happy to do that, but we wish them all the success, and I think it's very much needed for Saudi Arabia and the region.
Rand Lance, President Trump pledged to drill, baby, drill. Is it happening? And if it isn't, why not?
Well, I think the president's got a unique ability to boil things down to a bit of a bumper sticker. I think the drill, baby, drill, people get fixated on how many rigs are running in the U.S. and is that representing a drill, baby, drill. I think it's a broader strategy that the president is trying to articulate around taking the natural resources that are endowed to the U.S. and really continue that growth and development. So it's got multiple dimensions. It's permitting reform to speed things up. It's more infrastructure being built, high voltage transmission lines, it's gas pipelines. It's eliminating the LNG pause that the prior administration put in. So I think it's a statement that articulates a broader strategy that wants to use the endowed resources that we have in the United States to continue that growth and that development and continue to be able to import and export energy that the full world needs today.
Break-evens for U.S. shale, I think, on average, pre-trade wars and tariffs, were about $65 a barrel. What's the new break-even level now that, the cost of pipes have gone up, but also drilling has gone up because of tariffs?
Yeah, I don't think the break-even probably hasn't moved a lot. I think long-term, if you're going to see oil prices in a comfortable range, maybe in the 70s or 65 to 75, we'll still see continued modest growth out of the U.S. Now, what happens at sub 60 is we start to plateau in the U.S. and even in the 50s probably start to decline the production a little.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Jennifer Zabasaja at the Qatar Economic Forum in Doha. These are your top stories. Donald Trump warns he'll back away if there's no progress on talks between Russia and Ukraine following his phone call with Vladimir Putin. Stocks rise as the S&P closes near a bull market, shrugging off the U.S. ratings downgrade. But J.P. Morgan's Jamie Dimon cautions against complacency. Plus, Elon Musk and the titans of finance will headline the Qatar Economic Forum, which kicked off this morning. Over the next hour here in Doha, we will be joined by Danielle Pauly from Oaktree, TKO Capital, co-founder Matthew Chabran, and Aziz Aluthman Fakhru, the group chief executive of Qatari communications company Ooredoo. But let's continue our coverage from the Qatar Economic Forum here in Doha, where the Qatari energy minister and the CEO of ConocoPhillips are speaking on a panel on global energy security, moderated by Bloomberg's Francine Lacqua.
So we will be exporters from the U.S. I think the U.S. volumes are going to go to certain markets that are mostly Europe, South America, and our volume will predominantly be serving Asia. That it's difficult for the U.S. I think to reach or the entire volume to go to Asia. But in general, I think we need all that volume. It's us, it's the U.S. I think some Australian volume and others to care. You know, you're going to have 1.5 to 2 billion people on this earth in the next 20 to 30 years. And you have 1 billion people around the world that don't have basic electricity. So the need for electricity and power is huge. So we're not worried at all about, having a supply glut or anything like that.
And I think I would add that people immediately go to the competition between the U.S. and Qatar. It's really not. It's a cooperation because of the different market access that both countries have to the growing demand. So it's a cooperation. It's really not a competition.
But how do you see this? I mean, when you look, Ryan, at the impact of shale's new model of financial discipline or investor return, how is this different this time to previous downturns in 2015 and 2020?
Well, I think the balance sheets of the companies and the business is so much better. We've gone through consolidation and mergers and acquisitions, and the net result of that is the balance sheets of all our companies are in much better shape to withstand some of these downturns. Our company in particular, we've got a pretty deep inventory of low-cost supply resources, and that's what we're trying to drive so you can be profitable through the ups and the downs in this business. They're invariably going to be there. If you don't have a plan to deal with the volatility, you'll be dead in this business. Yeah. So, you got to have that, and it starts with a very strong balance sheet and being able to invest through the cycles with a very long-term global view of supply-demand, which we have, and it's very constructive.
And Minister, I know you've also been in talk with buyers such as China and India for a fresh round of LNG supply deals. Is there a sticky point? When can we have more news on that?
No, I think we're, after this talk here, I'm flying to China. We have the World Gas Conference in China that I'm speaking in tomorrow morning, and I'm meeting all the buyers in China. We have a great relationship with China. We are the largest supplier to China, and they are the biggest buyer by far, by more than double anybody else that's buying from Qatar. So we have a very good relationship. They are discussing with us additional volume. India is discussing with us additional volume, but we have multiple countries that are discussing with us additional volume. And these negotiations take time, and some go a little bit further. I think what you're alluding to is some articles that came out regarding sticking points and so on. You always have sticking points with all negotiations, whether it's with India, China, or anybody else. Everybody wants a better deal from both sides.
Everybody always wants a better deal, right? Let's face it. Ryan, when do you think U.S. shale production will peak?
Tell me the price. So if the price is in the 50s, we probably have sustained price. So I'm talking about not just what's happening today, but if it sustains itself over a long period of time, U.S. shale is probably, it's peaked and will start declining in the 50s. It probably plateaus for quite a while in the 60s. And actually, if you get back to sort of that comfortable range that His Excellency talked about, there's continued growth in the U.S. shale. So we believe it can
We've just been listening to Qatar's Energy Minister and ConocoPhillips CEO speaking with Francine Lacroix here in Doha. Terminal subscribers can continue to watch that conversation on LiveGo. The Qatari government is the underwriter of the Qatar Economic Forum, powered by Bloomberg. Let's get to the markets, though. The S&P 500 climbed to the brink of a bull market yesterday. Meanwhile, Fed officials are emphasizing a wait-and-see approach on rate cuts this year to see how the tariff uncertainty will play out. We're joined by Danielle Pauly, Global Credit Strategy Portfolio Manager at Oaktree, coming all the way in from Los Angeles. Danielle, so great to have you here at the Qatar Economic Forum. Let's just start with some of those comments we heard from J.P. Morgan's Jamie Dimon, warning against complacency in the face of a lot of uncertainty. How would you respond to those comments? Do you feel the same way about the way the markets are reacting right now?
We are in a period of unprecedented uncertainty, but amid that and the volatility we've seen, we're finding good opportunities in credit, which is Oaktree's focus. And what I would say about the credit markets today, you can characterize them as having attractive coupon income, relatively low defaults, but not that exciting of spread. If you think about the spread movement we've seen in credit, which can be a meaningful driver of total return, we've seen spreads as high as 460 basis points after the tariffs were announced, and we've seen the tights of 260 over the last year. We're right in the middle towards the lower end of the range at about 315 basis points today. So you're still able to get a pretty decent high income in the form of yield, but spreads are tight. And to me, that's saying that maybe there's a little bit of a disconnect with the market and what's happening with the economy.
What is that disconnect, though? What is the risk with the disconnect being intact, especially if you consider a lot of the unknowns that are still in the face of geopolitically, economically, that we're faced right now?
Yeah, I think you're seeing it in equity prices to have retraced those losses since Liberation Day. and the spreads, really coming in when there still is uncertainty with what may happen with policy. So we have seen a de-escalation, but we still know that some tariffs need to be negotiated, that we're in a period of pause. And what I think is actually happening in the real economy right now is consumers are starting to pull back on their spending, and business owners are starting to push off capital expenditures and other things that are going to translate into slower growth, regardless of how things go with tariffs. And you're seeing that, right, with some of the slowdown in container shipping and less flows at some of our major ports. So I think it's possible that over the next couple of quarters, irrespective of what's going on, we're going to see a slowdown. The concern is then that that slowdown translates into potential job losses, a potential recession. I don't think we're there yet. And I think in this type of an environment, you have to be flexible and nimble and really kind of cut through the noise, because there are great opportunities for those that are investing capital right now.
And let's talk about that, because that's where I wanted to go with you next. We're obviously here in the Middle East. Is that where your focus is? Is that where you are seeing the most opportunity? Talk a bit about, amid this uncertainty, where those opportunities lie.
Well, it's great to be here in Doha again. I'm having really energizing conversations about energy, investment, capital flows. This is a very important region, and I think that this conference in particular underscores the Gulf's influence on financial markets. And so a lot of good conversations are happening. We are a global investment firm. The global credit portfolio that I manage looks for opportunities on a relative value basis, whether that's in developed markets like the US, going into emerging markets, Asia, here in the Middle East. We're really open for business and looking for the opportunities that are going to provide that good high income with low default risk. And so for us in the public markets, that's high yield bonds, leveraged loans, structured credit. In the private markets, we're looking to do financings either directly originated with companies in the private non-sponsor market, some sponsor-backed LBOs, though M&A activity has been a little bit light as of late. And then in more, I think, niche areas like asset-backed finance that will provide interesting opportunities.
Do you see your clients wanting to shift away from the U.S.? We've been talking about sort of a lot of those trends that have been happening. Danielle, before we get to you, we're going to just actually go back. We are live at the Qatar Economic Forum in Doha, as we mentioned, where Bloomberg's head of economics and government, that's Stephanie Flanders, is hosting a panel on the geoeconomics of growth. Let's listen in.
Conversation with Bloomberg's Stephanie Flanders.
Excellencies, we don't have very much time. Thank you very much for being here. I think Donald Trump would be really enjoying this conference so far. He would really like that we have begun every session with a question so far about his trip. And I'm afraid I'm going to be no exception, because we still have a lot of questions and details to think about from that visit last week. Excellency Minister Al-Kawari, we had very big numbers talked about in terms of the deals that Qatar was going to do with the US. I think there was 243 billion, but the president also talked about an economic exchange worth $1.2 trillion. That's 5 times Qatar's GDP. Are these plausible numbers? Do we think that this is, did you just engage in a sort of bidding war, or should we take these numbers seriously?
Well, I mean, thank you, Stephanie, thank you. First of all, I mean, it was a great visit by His Excellency the President, to the region. I think this is a big statement, as Sheikh Mohammed said, for the region, and recognition how important the region, economically, politically, and geoeconomically and geopolitically, and from a stability. And this is, I mean, something that really we take it, also, and we appreciate it. From I mean, deals perspective, I think there was the $160 billion deal, with the Boeing. This is with Qatar Airways, and this is a normal, I mean, renewal of airplanes. This is part of the airline business. If you go with any airlines, this is normal, progressions. And the airlines, they do it over a long period of times, and also they have their own capital, their own access to finance. And they do like many deals, like buying and selling and lease buyback. I mean, so it's a very normal deals, and this is not something that we see it, And Boeing is an excellent aircraft, with the GE, engine. So it's in line with the Qatar Airways, strategies, in line with the, and the other deals is in line with the, our participation. The $1.2 trillion you talked about we are talking about economic partnership. And when we talk about economic partnership, it has a win-win situation. It's the U.S. companies doing business in Qatar. Qatar is doing business with the U.S. trade, and over some period of time. So it's not something abnormal. I mean, QIA continue to invest in the U.S. The U.S. is an excellent market. Is giving good return for QIAs in line with their investment strategies. Looking to the trade again. U.S. is enjoying a huge surplus. With Qatar for many years. Is one of, U.S. is the biggest import partner for Qatar. So these things are really normal course of businesses, course of actions, and the U.S. being the U.S., it's the biggest, economic partner for Qatar. So I do see this is like a big number, but this is a very normal course of actions, course of businesses, and course of commercial activities. It's a purely commercial, purely needs. Our defense, partnership with the U.S. is huge, and again, this is something that we benefit, as part. This is part of our, beefing up our military here in Qatar. So it's really something very normal, and we see we really value the partnership with the U.S. and it's very significant.
And just to quickly follow up, I know that the QIA is going to have more and more firepower as you ramp up the LNG exports. What are the key priorities for your international investments?
Yeah, QIA, they have their own investment strategies based on region, based on sectors. Of course, the priority sectors, today is technology, AI, pharmaceutical, infrastructure, real estate, and they review these strategies every year and they change it accordingly. And as I say, today, the U.S. is the biggest opportunities are in the U.S., in terms of these businesses, but they continue to spread around as well. And these strategies get reviewed every now and then to make sure they are aligned and taking advantage of the opportunities, yet mitigating risks,
And Excellency, Minister Ali Ibrahim, we had some even bigger numbers talked about in terms of Saudi deals last week. But I guess many people would say the biggest gift that the kingdom has given to President Trump in recent months is a lower oil price, and it is at its current rate is much lower than the kingdom needs to cover the external obligations, and certainly well below what you need to balance your domestic budget. So I just want, how are you thinking about how you're going to bridge that gap if the oil price stays roughly where it is?
So thank you, Stephanie. It's important to keep in mind that what we're undertaking in Vision 2030 and beyond Vision 2030 is a long-term, big-picture plan that is all about restructuring the Saudi economy. And I think other Gulf countries are going through something similar. We're doing that because we're investing in resilience, institutional resilience. This means that we will deploy the capital in the way that helps us get these returns, but help us also get the momentum to restructure. If you look at oil specifically, of course, our budgets are no longer driven by oil. Today, they're driven by our priorities. On the energy markets and oil, we've always been solving for long-term market stability. That guarantees that investments will continue to flow to provide the right kind of supply that the global economy needs. And of course, as part of that is OPEC plus discipline. So if you ask us 6 months ago, 1 year ago, etc., we'll always tell you that we're always ready for scenarios, multiple scenarios, and we have the buffers. We have the long-term fiscal planning and medium-term frameworks that help us adjust depending on what scenario actually plays out. But we're always thinking about not the next 12 months, but a longer-term horizon. And that's what most of the GC countries are doing as well. The GC countries and the economies are bright spots or jewels in the global economy today because of the ability to plan long-term, because of the ability to deliver long-term, and because of this institutional capability that's growing, coupled with leadership's vision, people's determination, but that institutional capability is helping us ensure that we continuously evolve and become agile.
And it is true that in the past, you have been agile, you've responded to periods of lower oil prices by cutting the domestic projects. I guess now we look at the pipeline of projects you have, things like the World Cup. They are commitments that are hard to reduce. So do you still have that flexibility when you have this enormous pipeline of committed spending and big projects?
So this transformation is anchored in discipline, but also bold action. We've prioritized our spend for many reasons, predominantly how do we accelerate our diversification, how do we continue to empower human capital, and to continue to build institutional capabilities. Of course, a subset of that has to do with public commitments, global commitments, such as that of the World Cup and Expo 2030, and so on and so forth, and that's all in our priority list.
Minister, Excellency, Minister Simsek, we were talking earlier, the biggest thing that happened last week during Donald Trump's trip to the region, at least where Turkey's concerned, was the lifting of sanctions on Syria, and indeed your president was on the phone call. We've also seen the PKK give up on 40 years of war against the Turkish state. What's the peace dividend or the economic dividend that comes from that for Turkey?
Well, terminal subscribers can continue to watch all of course, our Qatar Economic Forum on Live Go. The government of the state of Qatar is the underwriter of the Qatar Economic Forum, powered by Bloomberg. I'm Francine. I'm back on the pulse. I was just on stage because there's much more to come from the Qatar Economic Forum. But global geopolitics, of course, also taking center stage. Donald Trump says Moscow and Kiev will begin talks immediately on ending the war in Ukraine after he held a 2-hour phone call with Vladimir Putin. Now, the U.S. president says some progress has been made towards ending the fighting, but warns he'll back away if a deal is not reached.
Big egos involved, I tell you. Big egos involved, but I think something's going to happen. And if it doesn't, I'd just back away and they're going to have to keep going. I would say I do have a certain line, but I don't want to say what that line is because I think it makes the negotiation even more difficult than it is.
Well, for more, let's bring in Greg Sullivan, who leads our Russia economy and government coverage, and Roz Matheson, our EMEA news director. So, Greg, first of all, 2 hours of an awfully long time to speak on the phone. Is this a win for Vladimir Putin?
Well, that does seem to be a very fair characterization. Ahead of the call, we heard from Kiev demanding a 30-hour unconditional ceasefire that Kiev believed the U.S. actually backed. However, with the resolving of the call, what we have is an agreement to negotiate towards a ceasefire with no clear details or deadline. That falls far short of the demand before, and it does appear that President Trump is actually retreating from his demand for a ceasefire. Additionally, we heard no mention of sanctions. It appears that Trump is not looking to impose new sanctions to try to pressure Russia, and indeed, we didn't see much pressure on Russia at all. That means that this agreement will likely allow Putin to play for time, to try and make battlefield gains that will strengthen his hand at the negotiating table as he aims to get closer to his demands through military force. And one other point, of course, we heard Trump say that he would back away from negotiations if there is no deal, leaving Russia and Ukraine to negotiate directly. That also could play into Putin's hands. So a very fair characterization of this as a win for Putin coming out of this call.
Roz, what's been the Ukrainian reaction to the phone call?
Well, as we know, the Ukrainian President Zelensky spoke with Donald Trump before he spoke with Vladimir Putin, and seemingly after. Again, you can imagine a sense of disappointment there for Ukraine in that Donald Trump did not push Vladimir Putin harder, and if anything, as Greg was just saying, seems to be now like walking back from being that key conduit to get talks going and direct talks to continue between Russia and Ukraine. Because with the US stepping away from that, then who's going to be getting those two countries in a room, at what level, where, and how quickly? And that is really the thing that Ukraine wants, is to have proper conversations with Russia about bringing this war to a close. And we know that the direct talks that happened recently in Turkey between Russia and Ukraine didn't really make any progress at all. So what's the path forward here, and how can Ukraine get that to happen? Is it a ministerial conversation? Is it a higher level conversation? Who's going to arrange those talks? Where are they going to be? What would be the parameters for that conversation? I mean, Ukraine is saying, Zelensky was saying yesterday, what he wants is a memorandum from Russia laying out every single demand that Russia has to end this war as a starting point for negotiations. Of course, Ukraine has its own many red lines on this, and the key one is around territory as a starting point, but at least to have a clear sense of a roadmap here from Russia to begin talks. So for Ukraine, obviously a sense here of like, well, hang on, is the US going to be involved or not? In what way might they be involved? And where does that leave them in trying to push this towards a ceasefire?
But, Roz, I mean, we all saw those pictures of the European leaders on the phone, on a mobile phone, at times with Donald Trump. We were expecting them to push the president of the U.S. to push Putin for an immediate ceasefire. So what happened?
Well, yes, Europe also, officials today asking themselves what can be the role of Europe here, because if anything, Donald Trump has pushed it back to Europe, calling it a Europe situation to deal with. But Europe has been sidelined to some extent in all of this. And can they be the ones who can get Ukraine and Russia in a room together? And certainly disappointment. Again, the US is not talking about sanctions, pressure on Russia. And the role of Europe has to be questioned in all of this. What can they do? So a lot of hand-wringing going on in European capitals overnight, and now no doubt a lot of conversation today. But the path forward in all of this just remains very unclear.
Greg, are we any near a peace deal?
Well, a lot will depend on the negotiations ahead. As Ross said, it will depend on what level do the negotiations start out at, who is sitting at the table, and also on the time frame. We heard from President Trump saying that the negotiations would begin immediately, but Kremlin spokesman Dmitry Peskov said he was anxious to play down the idea that there was any sort of deadline, stressing that the devil would lie in the details. So if this does drag on, if the negotiations do last a while and become involved, that plays into Putin's hand of staving off, making a play for time as he tries to press his military advantage. So at the current situation, it doesn't look like we are much closer to a deal, but again, everything will depend upon the negotiations that happen towards the ceasefire in the days to come.
Thank you both for joining us, Greg Sullivan and Roz Matheson there. Now, let's stay with geopolitics, and the leaders of France, Britain and Canada are calling on Israel to stop its military operations in Gaza and allow humanitarian aid to enter. Now, the Prime Minister, Benjamin Netanyahu, says Israel will take over the entire Gaza Strip as the military announced it would carry out what it describes an unprecedented attack on Hamas. Well, joining us now is Paul Wallace, who leads our Middle East and North Africa economy and government coverage. Paul, this is a huge deal. What was, Netanyahu's response to the call from France, Canada, and the UK?
Well, he's essentially said they are asking Israel to end the war before Hamas is defeated, and that this will just play into the hands of terrorism, and especially Iran-backed terrorism. That's his view. We've got two almost contradictory things going on here. We've got Israel stepping up its offensive in Gaza against Hamas, and at the same time, Israel, for the first time in more than 2 months, allowing some aid back into the Palestinian territory. The UN says it's just a trickle. Way more needs to be done. The humanitarian and food situation on the ground is clearly worsening. Israel says it's not so acute yet. The UN disagrees. But the point is it's getting worse, and Israel is saying it's, almost bowing to international pressure to allow some in now to prevent a famine.
Well, so how much do we know about this humanitarian situation? Again, I mean, there's no food, there's no medicine supplies.
It depends who you talk to. Israel has said while medicine and food supplies are shortening, there is not a dire situation yet. The UN and many other international aid agencies disagree. You've had the likes of France's Emmanuel Macron saying Israel's blocking of aid is shameful. And even the US is clearly getting frustrated. So it's clear that whatever the situation is right here, right now, it's getting worse and it's not good. And that's why we're seeing finally the allowing of some aid back into Gaza, even if in very small quantities right now.
Well, thanks so much. We'll, of course, continue following this situation very closely. Paul Wallace, who leads our Middle East and North Africa economy and government coverage. Now, coming up, we'll discuss here more from the Qatar Economic Forum, the outlook for private markets in a changing global landscape. We'll be joined here in Doha by the Tikehau Capital co-founder. This is Bloomberg.
But what about the diagnosis? If the diagnosis at the end is worries about growth rates,
Yeah.
how do you get from point A to point B? Why do you worry so much about that end goal of better growth?
Because if we can't grow, you're going to have a much more inflated debt to GDP and federal deficit, and that's not good for the economy. Growth is really critical, and I think what's underappreciated is what the inputs are to get to the growth number. And so we talked a little bit about productivity. I hope that we can continue to produce at 2% indefinitely on productivity. I think that would be great. But you got to make sure you have the other levers in place, I think, to buoy that. So if you look back over the last several years, we've had 8 million immigrants come into this country in the last 4 years. And that's helped growth. And by the way, that's deflationary.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Ruhodern in Buenos Aires, Argentina, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua. You're at the Qatar Economic Forum in Doha, and these are your top stories. Donald Trump warns he'll back away if there's no progress on talks between Russia and Ukraine following his phone call with Vladimir Putin. The S&P closes near a bull market, shrugging off the U.S. ratings downgrade, but J.P. Morgan's Jamie Dimon cautions against complacency. Plus, Elon Musk and the titans of finance will headline the Qatar Economic Forum, which kicked off this morning. Now, the private credit sector has grown rapidly, pretty rapidly, into a $1.6 trillion corner of the financial market. As private equity has stumbled, investors have been keen to plow more money into its sister industry. But borrowers, of course, are also increasingly feeling the strain of stalling economies, trade tensions, and persistently higher interest rates. Now, joining us now is Mathieu Chabran, co-founder of Tikehau Capital, a global alternative asset management firm with more than 50 billion euros of assets under management. Mathieu, as always, thanks so much for joining us. Look, there's a lot going on, for the worse or for the better. I think you said you're eyeing some 85 potential acquisitions. Is it still the case, or are there more because of volatility?
I mean, it's always the case. I mean, you know that the industry is going through a lot of consolidation, you know, no doubt. You saw many headlines, you know, transactions, some flagship transactions, but being in Europe, in the US, even in Asia, we're seeing this trend now because scale has become, the name of the game. And, yes, today you've got some generational shift, some cyclical, opportunity as well. And then fundamentally some structural changes that I'm sure, we'll be discussing.
I mean, the structural change is what? Is it trade wars? Or is that something that you can look through? Again, do you see valuations getting down and so being able to find a better deal? Or are people just looking inwards because they're a little bit afraid of the future?
I mean, not yet, but clearly, you saw what has been happening over the past few weeks and even more so over the past few days, as you were on stage, earlier on. I mean, you saw what Hong Kong said, about holding some treasuries. And, after the sell-off in a month ago, after the downgrade, when you have this whole repricing of asset classes, obviously some repricing will happen even in our industry, for sure.
Where do you see the biggest value? I mean, if you look at industries, I know you've been in the past, keen on defense, but it was climate change. Has the sectors you want to be invested in changed?
No, things haven't changed. I mean, you heard that this morning. Even the Prime Minister, was talking about the importance of keep, investing in renewable, in decarbonation. So even being here in Qatar and after, last week's trip of President Trump, in all the wider, region, I mean, the themes have not changed. I mean, we've entered a world post-COVID with a higher interest rate, lower growth, and you have to focus on those mega trends. And energy transition is one of them. Defense is definitely one of them. Cybersecurity is one of them. And we are active across those industries.
What do you see in nations in the Middle East? Is there anything that you're eyeing specifically with companies in this region?
What is really interesting for the region, for us, where we sit, primarily in Europe, obviously increasingly in the US, is taking some of our portfolio company into the regions. There are huge needs, for investment. There's no shortage of capital here, but there is huge need of investment, and we bring part of this technology, this know-how, this savoir-faire, of many of our portfolio companies, and they benefit from that. Bigger market share, exchange of technology, and that's really the opportunity we see here.
Can we expect new deals, or is it just fundraising?
No, I mean, well, it's really both. I mean, there is a rebalancing of capital. We discussed that at length these past few weeks. Obviously, President Trump came last week, and a number of headlines, deals were announced. But you saw what happened yesterday at Truth France, for example, in Paris that you guys covered too. There is some huge rebalancing of capital coming from Asia, from the region here, and from where we sit at Tikehau Capital, we're clearly, taking advantage of that.
Mathieu, do you have a view on the dollar, and do you need a view on the dollar to make better investment decisions?
No, I mean, I'm more concerned about the debt level in the U.S., obviously the treasuries, and the consequences then, on dollar. I think I'm with Jamie Dimon, when he said yesterday that there was a lot of complacency. I think we are on this fine line between comfort, because it's always very comfortable to think that will remain, the major assets and currency, and it's a fine line between discomfort and complacency. I think we should all be very careful. There is too much debt in the system, certainly in the U.S., the part, of the world, and this wider, organization where you always need the marginal dollar coming into the system to keep the wheel flying, if I may say. We should be very diligent here.
So are you a bit wobbly on treasuries? What's your take on treasuries?
I think I am. I mean, we saw that as soon as we had the downgrade on Friday, you had some sell-off. Then it came back. I mean, a month ago, it was about effectively the spike in the 10-year, interest rate. The Fed, obviously can step in, but one should not forget that it comes down to supply-demand. And there is a lot of supply coming, we know that. I mean, structurally, there are some issuance coming. And so we should make sure that the demand stays, on par with this demand, or with these supplies. Otherwise, we're going to be drifting, and then we could get into some concerns, I guess.
But Mathieu, how do you explain this complacency? Because there's just a lot of news coming at you from everywhere, right? It's geopolitics, it's Russia, Ukraine, it's what's happening in the Middle East. So it's that the market, is a little bit startled, and so just hangs on tight to what they know, or are things really being mispriced?
I think it's a bit of both. I think we're coming collectively out of a period where we all thought that there was, some kind of a moral hazard, that you could keep printing, that money was free. And now, see what's happening, in the U.S. mid-market default rate. it's spiking, and that was spiking, even before the tariffs, because that's the money that is due from the COVID-free era, and so there's a bit of that. I think the fact that the market, got used to it, and also you see the disconnect. I mean, the public equity markets, if you tie that back into the cost of capital today, both from a risk-free rate, but also the credit market that, may be open, but not for everybody. And so here I think there's a little bit of mispricing.
So how much do you worry about private markets?
So private market, depends what you call private market. I don't think we have time, to cover, all of that. But we are very careful on this default rate, going up in the US, because they start from a much more aggressive starting point. It's less the case in Europe, lower level company. In Asia, very appealing, market right now. So it's not a systemic worry, but we should be very careful how it is being distributed. And I know that there will be some discussion later on, at the forum, over the next 3 days. But it does not fit everybody. I think that's the bottom line.
Yeah, it depends on the risk profile, and you're absolutely right. We're going to see and hear a lot about that on stage. Mathieu, thanks so much. Mathieu Chabrol, co-founder of Tikoho Capital. Now, we'll have, of course, plenty more on this. Also, the world's largest EV battery maker closed up more than 16% after debuting in Hong Kong in the world's biggest listing this year. Now, CATL raised more than $4 billion despite being blacklisted by the Pentagon.
This listing signifies our deeper integration into the global capital markets and marks a new milestone in our mission to drive the global zero-carbon economy. CATL is not just a battery component manufacturer. We are a system solution provider and are committed to becoming a zero-carbon technology company.
Well, let's bring in Danny Lee, our EV supply chain reporter. Danny, thank you for joining us. So how can the funds from the listing actually help CATL expand?
Hey, friend. You heard from Robin Zheng there with that ambition as he sets out to invest more, and particularly with the funds it's raising in Hong Kong. It's going to be used for further expansion, international expansion in Europe, focused currently on Hungary, but it's got ambitions to broaden out its capacity in Germany, in Spain, and elsewhere, and really take advantage of the weakness and failures of other battery makers in Europe, startups which have failed. And for CATL being so dominant in the EV supply chain already and what it's been able to do to innovate and keep a tight grip on the global market, it really is taking the lead to try and push further peers away and to really take control. And, the fact that outside of China, it can make much more in the way of margins. So by capitalizing on this expansion, the interest in EVs, CATL is very much a bellwether stock for the global EV market. And given the faltering demand outside of China, it really is one to watch as it looks to broaden out its ambitions beyond EVs, as you heard from Robin Zheng, into many more products.
Danny, thanks so much. Danny Lee there, our EV supply chain reporter on the latest with CATL. Coming up, Gulf investments are in focus this week. Yeah, you would have guessed it. We're here at the Qatar Economic Forum. I'll be joined by the Group Chief Executive of Qatari communications company, Ooredoo. We'll talk about the outlook for the firm in the region next, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back, everyone. I'm Francine Lacqua here at the Qatar Economic Forum in Doha. Now, this week at the Qatar Economic Forum, we'll be discussing, of course, the shifts, the big shifts in global money flows, making the Gulf not just a dominant energy supplier, but also finance and investment hub as well. Well, one company hoping to benefit from the recent investments and deal-making in the region is Qatari communications company Urdu. Their group chief executive, Aziz Al-Uthman Fakhru, joins us now. Thank you so much for joining us. There's a lot going on in the space. There's a lot going on for the company. Can you give us an update on how you're expecting to grow over the 6, 12, and 18 months?
Look, we have very robust growth, and we're very lucky at Ooredoo. We're a mix of markets. We have the GCC, which is the stable, dynamic economic zone with a lot of local currency stability, economic stability. But we also operate in high-growth countries like Iraq, Algeria, Indonesia, where we have double-digit growth. And that gives us a very balanced portfolio of risk-adjusted return and risk-adjusted growth. So we're very lucky to be in the industry we are with the footprint we are in.
What's your outlook for data centers?
We can't build them as quickly as we should. The demand is overwhelming. Data centers take 18 to 24 months to build. There's a lot of demand. There's local demand. You've seen all the announcements with the Trump visits, etc. Some people are saying, well, if every country is building that much, who will use it? The first demand is local sovereign usage. And thanks to the regulatory environment, we operate in Kuwait, in Oman, in Qatar. All these countries require their own instances of cloud, of AI, and we're here to build them up.
How much money do you have actually to build for these data centers? So money, but also timeline of when you're expecting to be them up and running.
We've committed $1 billion over the next 3 to 4 years, and we're looking to triple our installed capacity. So we're looking to go up around 120 megawatts within that time horizon.
And how much will that investment contribute, of course, to your profitability?
So this is a long-term business. It's different from the telecom business. Huge free cash flows in the telecom business. What's great with data centers, it's an annuity business, dollarized return. It gives that stable flow of income. Telecom will always represent around 80% of our business. These new adjacencies are around 20% of our business going forward.
Everybody wants to get their hands on NVIDIA chips. How much will NVIDIA chips will you have to buy, and are you in line to buy?
So we were the first telecom operator in the region to be an NVIDIA cloud partner. We already have chips installed in Qatar. We're receiving the batches for regional countries. We have roughly 15 megawatts of AI chips already installed in Indonesia. We're one very close partner of NVIDIA. Again, we can't build the data centers. The restriction right now is not so much the chips, it's building the data centers quick enough.
But do you have an idea of how many you need and how many will be available, or it's something that it's not a supply problem for you at the moment?
Right now, we have an idea. We're looking for instance, the Qatar market, at least 3,000 to 5,000 chips. It also depends on the specs of the chips.
Of course.
Each country's. In Indonesia, we already have 2,000 installed. But everyone focuses on the chips. On the data centers, one big part which people are forgetting is connectivity. We're investing a lot, also nearly $500 million in undersea cable, connecting the region to Europe and Asia. You have to remember that around 30% of the world's internet connectivity flows through this region. Europe to Asia, 90%. And all these data center, all this AI infrastructure needs connectivity, which is our core business.
I mean, we're just outside the plenary session. I have to say the buzz is pretty incredible. Given the buzz in Qatar and the region, how much CapEx do you see in general? And basically, you know, if you break it down into what units, so how much does CapEx data centers, how much you pour into that compared to the rest of where you want to be invested in?
So in the telecom sector, we try to stay at a 14% CapEx to sales ratio. But if you look at our trend, we went from close to 3 billion of annual CapEx to 5 billion. So as I said, telecom is stable. All the incremental CapEx is in 3 business units, data centers with AI, undersea connectivity and land-based connectivity, all the fiber networks, and also our fintech business.
Are you looking to expand in new markets?
We're constantly in the lookout. We operate in 9 markets. We're expanding already geographically outside of our core telco footprint through our tower business. And we're looking to expand every single business, data centers, fintech, undersea connectivity, and core telecoms. We start from the same base, but then we can expand through different geographies.
Any appetite for mergers or acquisitions?
It's my DNA. If you know my previous life, we already did the Indosat merger. We disposed of Myanmar. We announced the largest tower company in the region merging with Zain. So we're always on the lookout.
Okay, what's on the table right now? Is there anything that looks attractive?
So valuation are coming down. We're starting to see actually attractive opportunities. Are they executable? It's always a question.
Okay, it's a good question always to ask yourself. Thank you so much for joining us.
Thank you for that.
Aziz Al-Uthman Fakhru there, the Group Chief Executive Officer of Qatari Communications Company, Urdu. Now, more on the AI theme now, and OpenAI's Chief Operating Officer has told us he does not think AI will take away jobs, but roles will change in the future. Now, Brad Lightcap, who recently took over day-to-day running of the AI mega startup, spoke to Tom McKenzie exclusively.
I don't think so. And I think that's because the world is actually gated on resources, on productivity, right? I think if you talk to any enterprise, and we talk to companies all the time, I ask them, what's their #1 concern for how they think about the next 5 years of investment? And oftentimes one of the things we hear is, I can't hire enough software engineers. We live in a digital economy. I know I have to transition my product, my services, my business processes into more software-based approaches, but I don't have enough people. Right? So how do you now bring a tool to the market that enables a software engineer to be 50% more productive, 2x more productive, right? This is an incredible thing. And so that's actually kind of the way we look at it, is to the extent you can enhance output, right? Then it really is just on the company, the firm, the individual to figure out ways to do new things. And so job growth, you know, the job question will inevitably be different. Like jobs will change, but I don't think there's reason to believe that jobs will go away.
Stargate is being built out in the US, obviously, with your partners. What about sovereign AI? What about Stargates outside of the US? Are you in conversations with governments around the world about building out Stargates outside of the US? What does that conversation look like? How many different countries are you talking to at this point?
Well, we see this incredible demand, not only from individuals, not only from companies, but even from governments for how do we start to bring AI kind of into our country, right, into our kind of national consciousness and have it penetrate in a way that, you know, accrues benefit to the average person. That was really the big initiative behind our recently launched OpenAI for Countries, was how do we actually work with governments to design some of these programs, and that includes infrastructure, it includes deploying the models, it includes figuring out how to integrate government services, for example, into ways that you know, would be more AI-powered, AI-native, and it includes investment in the economies of these countries to enable a startup ecosystem that we see thriving.
Which countries are on your list right now?
Well, we right now, we're very early, we announced this very recently, but we think it's going to be a scalable program.
That was Brad Lightcap, the Chief Operating Officer of OpenAI, speaking exclusively to Tom McKenzie. Now, China is accusing Washington of undermining recent trade talks with its warning that using Huawei's AI chips anywhere in the world will violate U.S. export controls. Well, the Commerce Department issued this statement last week. The U.S. has since toned down its language, removing the reference to anywhere in the world from its statements. Now, in other news, President Donald Trump plans to head to the U.S. Capitol today to rally House Republicans behind his tax cut legislation. Well, despite general agreement amongst Republicans on the reductions, lawmakers have clashed over cuts to safety net programs and deductions for state and local taxes ahead of the self-imposed deadline of the end of this week. Now, in banking news, UBS is said to be heading for defeat in its first efforts to water down a Swiss law, raising its capital requirements. Sources say the proposed bill would force a lender to boost its ability to cover losses at foreign units to 100% of their capital. Now, that would mean as much as $25 billion in extra capital. Now let's return to our coverage from the Qatar Economic Forum here in Doha. It takes place in a region that's become one of the most influential in global finance. Now, this year's event features top executives from around the world and also key names from President Trump's circle, including his son, Don, and Tesla boss Elon Musk. Now, I'm now joined by Michelle Hussein, Bloomberg Weekend editor-at-large, who will be in conversation with Elon Musk a little bit later today. Michelle, thank you for joining us. I'm excited about your interview. You have a long time with Elon Musk. You're trying to get to the bottom of what he's thinking. I mean, the last time he spoke to us was 3 years ago.
Yes, and Francine, it is so interesting to look back at that conversation. We know, of course, that the world has changed in that period because it's nearly 3 years. It was June 2022 when he last spoke here. But actually, when you read back those words, it really comes into sharp focus. At that point, he hadn't yet bought what was then Twitter. The deal was not complete. He hadn't decided who to support in the next U.S. election. He was talking about Ron DeSantis. And he certainly was nowhere near the amount he ended up spending, because he was saying, I think I'll spend $20 to $25 million on the next U.S. election. And he ended up spending 10 times that. So his world has changed as well as the world changing. And I think my challenge in this conversation is going to be to get as much insight as we can, both into his businesses, because obviously whether it's Tesla or SpaceX or XAI, Starlink, they're all so interesting and have different challenges and opportunities facing them. And of course, an insight into his government role. And even though we know that he's going to be doing less with Doge, he's also said he will remain involved in what he calls critical work on waste and fraud. So there is a lot to try and get to in the course of this.
There is, Michelle. How much do we know about his relationship with President Trump? It's very difficult to categorize, actually. They were friends for a long time, and now they've taken a little bit of space.
Totally. Well, it's definitely personal as well as political and with interests aligned. And I think we're certainly in a different phase now. If you think about the days before the election and then the early days of this administration, those appearances in the White House, right in the Oval Office. So there is probably a little bit more distance publicly, but at the same time, and of course we know in practical terms, Elon Musk wants to spend more time on Tesla, and indeed needs to spend more time on Tesla, because in his words, that brand has suffered blowback this year. But its problems are continuing. It's not just Q1 sales figures. We can see that very sharply in Europe sales figures for April, where sales are significantly down in big markets compared to a year ago. So that really does need his attention. But he can't let go of that government role completely. The amount that it looks like Doge is going to cut from the federal budget is quite different, it appears now, compared to the at least $2 trillion that he was talking about last October. So that's, again, something that I hope we can get into in some depth in this conversation. The thing is, he's a big figure. He's got this extraordinary international reach. Countries all over the world want to get Starlink, for example, is just one example of one of his businesses in the communications area. So he spent 3 hours with Joe Rogan. He's going to spend 30 minutes with us. So it's a big difference. Like, there is no end to what you want to ask him, but I'll get as deep and as wide as I can in that time.
But Michelle, yeah, I mean, he does also epitomize, this White House maybe more than any other administration, blurs business with politics, and he's kind of the potential poster child for this.
He's absolutely at the heart of that. When you look at the president's trip to the Middle East, he came to the region, and if you look at the number of CEOs who were with him in Saudi Arabia, for example, there is a wide range. American finance, American industry was represented, but only Elon Musk has this unique place where he is both not only a huge businessman, but also he is a government contractor, as well as someone who now has an insider's knowledge of the US government through his work with Doge. So it is truly a unique and unprecedented position that he's in.
Michelle, thanks so much. I really, really cannot wait for that interview. That was Michelle Hussein, Bloomberg Weekend editor-at-large. Now, a reminder that Michelle's interview with Elon Musk is coming up at 2 p.m. London time. So we'll put it on our website, we'll put it on the Bloomberg terminal, and of course we'll have it on TV. Now, in the next few minutes, we'll look at the future of oil and gas with the ConocoPhillips Chief Executive Officer. A reminder, we'll be live all week from the Qatar Economic Forum in Doha with a stellar lineup of guests. Up next, Bloomberg Brief, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
What would it mean for India to host the Olympics?
Linda, I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see the Olympics being held in India. I think once sport takes over, the transformation will be seen, not only in the lives of the youths, but in the economy of our country. India is one of the biggest centers for digital usage, and 1/3 of the viewership of the Olympic channel comes from India. So India as a sporting market is huge.
Countries which have hosted the Olympics have always grappled with the issue of infrastructure, for instance. Building it is one thing, maintaining it is another. How can India do it differently if it were to host the Olympics?
So I think we're talking about innovation and sustainability. And I think the same holds for holding the Olympics. What if you look at a sustainable model? What if you look at refurbishing old stadiums, reusing what we have? So I think the move has to be a sustainable move.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Good morning from our headquarters in London. I'm Kriti Gupta in for Danny Berger. Welcome to the Bloomberg Brief. Let's set your agenda this morning. Backing away, President Trump says Ukraine and Russia would begin ceasefire talks soon, but warns that the U.S. would back away if a deal is not reached. And POTUS headed to Capitol Hill. The president plans to rally House Republicans to unite behind his tax bill as GOP hardliners eye the ballooning deficit. And mounting risks. Jamie Dimon warning against tariff complacency and cracks in the credit market as odds of a downturn rise. A lot of these issues ballooning in the background, but let's see how they factor into these markets, because the futures picture is souring, but I'm not seeing panic in the early indications of those opens. S&P futures down about 0.3%. The Nasdaq 100 seems to be where the pain is down about 0.4% there. In terms of what the tone is being set on from Europe, let's get some of our stocks to watch in just a moment. We're going to get the bond market picture first, though. We are seeing a bid into the U.S. Treasury market, but again, only down by about 1 basis point across the curve. And that's something you're seeing as a retracement, perhaps, of yesterday's move, a 10-year at 4.43. As promised, let's get our stocks to watch here. Bloomberg's Joe Easton is standing by with some of those early movers. Joe.
Morning, Critty. So a bit of a mixed pitch on the Mag 7 today. We are seeing some of the stocks gaining, some of them slipping, but one I've got my eye on is Alphabet ahead of this conference from Google, where they're going to be showing off a load of their new AI features according to analyst predictions ahead of that event in California. The Google stock, Alphabet, up around 0.3% in the pre-market. Then take a look at United Health. We had a big gain in that stock yesterday. We're up around 8%. It was the biggest gain in around 5 years. And we're up another 3% today. The company continuing to trim those losses that followed news of that probe into their Medicare business. And then finally, looking at UBS, the Swiss lender, facing potentially having to have $25 billion of capital on its books. The Bloomberg finance team is reporting that they are potentially going to lose their latest attempt to kind of lower that number in terms of the capital requirement. As usual, Critty, all of these stories and more available on the Before the Bell opening wrap, which will be available on the terminal very shortly.
Bloomberg's Joe Easton there walking us through some of those early movers. The UBS story, to me, fascinating. I can nerd out about capital requirements all day long. We thank you so much, Joe. And coming up, of course, this hour, we are live from the Qatar Economic Forum. Ryan Lance of ConocoPhillips will be joining the program shortly. And then we head right back into the markets. Eric Nelson of Wells Fargo, macro strategist there, talking to us about what the bigger issue is, the deficit or the trade story. We're going to get his view in just a moment. But let's kick it off with perhaps our top story this morning, which is President Donald Trump sparking fears of U.S. disengagement after he said truce talks would begin immediately between Kiev and Moscow to bring an end to the war in Ukraine. Now, speaking after a 2-hour phone call with his Russian counterpart, Donald Trump warned he's going to back away if a deal is not reached.
Big egos involved, I tell you. Big egos involved. But I think something's going to happen. And if it doesn't, I'd just back away, and they're going to have to keep going. I would say I do have a certain line, but I don't want to say what that line is because I think it makes the negotiation even more difficult than it is.
President of the United States there speaking about the future of the Russian and Ukrainian conflict. Let's get a little bit more analysis this morning. Bloomberg's Russian economy and government editor, Tony Halpin, joins the program. Tony, just your initial thoughts on how this phone call actually went. Is that a positive that he's saying that there is going to be some sort of phone call, some sort of dialogue between the two sides, or negative that the U.S. is perhaps taking a step back? How are you thinking about it?
Well, I mean, the optimists would say that it's a good thing that Russia and Ukraine are negotiating, and that may lead to some sort of agreement that would end the war. But realistically, that wasn't what Ukraine and Europe was hoping for from this call. They were hoping that Trump would put pressure on Putin to agree to an unconditional ceasefire for a period of 30 days or more in order to allow space for these talks. Putin clearly didn't want to do that. Trump was expected by Europe and Ukraine to at least threaten sanctions on Putin to try to push him towards that position, but that's not what happened. Instead, he suggested that maybe he'll walk away if they can't reach a deal. And we have to remember that Russia started this war, so walking away from a war that Russia started is much less of a threat and an issue for Russia than it would be for Ukraine and the Europeans.
Talk to us about that role of the Europeans, though. I mean, I thought it was so telling that Donald Trump not only said he had a phone call with Vladimir Putin, Vladimir Zelensky, and then some of the European leaders as well, which have been notably absent from those discussions. Who takes the lead, if not Donald Trump?
Yes, the Europeans are pretty despondent, actually, it has to be said. I mean, they were hoping and they thought that they had the US on the same page as them, essentially, that if you remember, they issued this ultimatum that Putin should agree to a ceasefire a week ago, and if not, that there'd be new sanctions imposed. Well, that deadline came and went, and it turned out that Trump really wasn't on the same page as Europe. So it's hard to see who steps up if Trump steps back. The German chancellor maybe is angling for that position. France's Macron is also considered one of the leaders of the European position in trying to get tougher on Russia. But part of the problem for Europe is that it doesn't really have an agreed position that everyone will sign up to. And that's true even in the European Union, where people like Hungary's Viktor Orban are dissenting over the idea of tougher sanctions.
Absolutely, something that we're going to be keeping a very, very close eye on. We'll see if we kind of inch towards progress. If the Europeans can perhaps continue to hold that torch. Tony Halpin We thank you so much for that crucial context. Let's stay with the policy coming out of Washington and focus inwards, if we can. House Republicans failing to hash out an agreement on a tax bill that satisfies some of its representatives from high-tax states. Now, Speaker Mike Johnson ending a late-night meeting yesterday with some of the holdouts. Let's get some of the details behind the thinking in Washington at the moment. Bloomberg's Joshua Galou joins us this morning. Josh, just walk us through the details here. How should we be thinking about potential tax cuts coming down the pike?
Well, the recent developments are showing what a difficult coalition the Republicans have to bring together on this. Typically, tax cuts are, a mainstay of Republican policies. But what we're seeing here is that not only the level of tax cuts, but the targeted cuts in spending are dividing the coalition. So a couple of the main points that are going to have to be resolved are that, a big one is the state and local tax deduction. In the 2017 bill that Trump made, these tax cuts that are set to expire this year, they lowered the cap. They put a cap, a $10,000 cap on state and local deductions from federal income taxes. And, states like California, New York, New Jersey, where Republican representatives are getting a lot of pressure from their constituents to raise that cap, they're not going to go along with a bill that doesn't lift that considerably. That, of course, cuts into revenues. And when you are talking about the level of cuts that they want to do, $3.8 trillion over the course of 10 years, that's really important. So he's going to have to bring that coalition together. And of course, Trump is headed to the Capitol today to do that. But, he's up against some pretty staunch opponents of that part of the bill.
Joshua, can you just tell us what happens if this bill moves forward? Is that a guaranteed yes to a lot of those fears that the deficit is going to widen at a faster pace than expected?
Well, nothing is guaranteed, but of course, the administration says that this bill will, or this law would spur economic growth, and economic growth creates tax revenues, and therefore the deficit would not widen. That's their sticking point, but economic analysis, and tax analysis basically shows, they estimate that this could widen the deficit by trillions of dollars, up as much as $3.3 trillion. That would bring the debt ratio up, debt ratio to GDP up near 7% in the coming years. So, and we've already seen Treasury markets reacting against that, showing that indeed the markets think that this bill would create a great deal of burden on public finances. So, again, that's another part of the Republican coalition that's going to be tough to bring along here. There are hawks in their fiscal hawks that don't want to see the deficit widen.
Absolutely. How do you do the math around tariff volatility and, of course, the impact of the Doge story as well? Josh Galou walking us through the dynamics in D.C. right now. We thank you so much. Coming up on the program, more from the Qatar Economic Forum, an exclusive conversation with ConocoPhillips CEO Ryan Lance coming up next. But just ahead of that, you're looking at a live panel. We're going to go to Doha, of course, for a live panel at the Qatar Economic Forum. Currently in conversation, the former Egypt foreign minister and ambassador to the United States, as well as KKR chairman of the Global Institute, with our very own editor-in-chief, John Micklethwaite. You can catch the full coverage and conversation on LIVE Go on your Bloomberg terminal. This is Bloomberg.
Israel in 1 second, but David also mentioned Iran. David, do you want to just take that forward? Now that Syria has been brought into the fold, do you think there is a chance of Iran also being brought back into the fold?
That's probably a bit over-optimistic, but there's a chance that there could be a nuclear deal that doesn't have some of the shortcomings of the previous nuclear deal that could enable the lifting of sanctions progressively and so forth as confidence is built, and that could lead to them being a more constructive player in the region than they certainly have been for many decades, noting all the damage that has been done by their proxies in this region and still being done by the Houthis, who have still not resolved the issues there. So I think it's an opportunity that all are working as hard as they can to achieve. You can see the narrowing of the differences between the U.S. position and the Iranian position. No enrichment whatsoever is the U.S. opening. Maybe that ends up being for 3 years, and then you have an opportunity to do something smaller. Again, but you can actually see this deal starting to come together. And assuming Iran then also stops some of the terrible activities that they're doing through proxies in the region, which have been so destabilizing, then you can start to see the contours of something that could be much more positive.
Do you think, I'll come to Nabil again in a second, but do you think that regime change is now slightly off the table with Iran? I remember years ago.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Kriti Gupta in London. We head back to the Qatar Economic Forum in Doha, where our very own Francine Lacqua standing by for an exclusive interview. Francine.
Kriti, thanks so much. I'm delighted to be joined by Ryan Lance of ConocoPhillips. Ryan, thank you for joining us. We were on stage together, also with the Qatar Energy Minister, talking about demand and supply. First of all, how do you see U.S. shale evolving in terms of production, given the prices?
Yeah, the current price deck, it's you have to ask the question, what's going to be the sustained kind of price? And look, if the prices are going to remain in the 50s on a sustained basis for a period of time, U.S. shale is probably going to start to slowly decline. If it stays in the 60s range, it's probably going to plateau a bit. If it goes back to the high 60s and the 70s, we're probably back on a growth trajectory for a couple of years. But shale is maturing. Those that don't have Tier 1 acreage like our company does, we'll start to see some of that deteriorate, and you see plateauing production probably later this decade in the U.S.
But do you think U.S. shale production has peaked?
No, I don't. When we look at our inventory, we've got decades of low-cost supply inventory that's pretty durable over the long haul. And there's a number of companies like our company that have that similar situation. So if we see prices recover back to a mid-cycle and above kind of price in the mid to high 60s or 70s, then I see some moderated growth coming back in the U.S. shale.
I know on stage you told me it looked like this downturn actually in oil prices is different to what we saw in 2015 and 2020. What's so different about it?
Well, I think it's what's different is we're seeing an expectation of demand falling off with some of the trade and geopolitical things that are going on today. So some are talking about recession, some aren't. We don't believe a recession is coming, but we have seen global GDP back off a little bit. And there's a pretty tight correlation to oil demand growth and global GDP. So there's an expectation out there that things are going to slow, which has caused the price to go down. That combined with extra supply coming from OPEC Plus has put some downward pressure on the price. So this one does feel a lot different than 2015 or 2020.
I know tariffs and actually trade wars have settled somewhat, but what kind of impact have you seen on the industry longer term?
It's been just a smaller impact. For U.S. companies today, most of the impact is in steel and aluminum, which is about 15% of the well cost. But the overall deflation coming as a result of lower prices is overwhelming the increased cost maybe that we're experiencing due to some of the turmoil on supply chains and tariffs today. So overall, the lower price is causing deflation. Rig rates are coming down, frac spreads are coming down, rigs are coming down. Yet there is a bit of stickiness sitting in sort of steel and aluminum. And it's those big high-quality projects that are valves and things that aren't manufactured in the U.S. that we have to import from outside the U.S.
Ryan, how do you see the LNG market actually developing? You have huge, also, infrastructures here in Qatar.
Yeah, I think it's going to be a remarkable. Our own in-house view is a lot of growth in the LNG coming, probably 1% to 2% compound annual growth, a 400 million ton market growing to over 700 million tons over the next decade and beyond. The U.S. is blessed with a tremendous amount of gas resource. We can fulfill our domestic demand, we can keep prices low, and do an export channel in probably that $3.50 to $4 million BTU. So U.S. will probably set the floor for prices around the whole globe, and we're pretty bullish and constructive on what the LNG markets are going to be, not only from a security supply perspective, but really from a climate and from a reducing emissions life cycle perspective as well.
If you look at the oil prices, do you worry about CapEx actually in your industry, that not enough will be invested in either renewables but also just finding,
Well, certainly at the lower commodity prices, the cash flow coming into our companies is less, and you got to reduce the capital. You want to keep your returns back going to the investors. That's important. This business, it is about return of capital and return on the capital that you're investing. So yes, lower cash flows result in lower commodity or lower capital that we can reinvest in the business. But again, we take a very long-term view of that. And the balance sheet in the industries are much, much better. So we have the ability as an industry and certainly as a company to withstand some of these cycles that we're going through and the one we're in today.
As a company, where will you invest most and in what time frame?
We're pretty scattered around the whole globe. We're in 16 different countries around the world. North America, the unconventionals get a lot. We have a large project up in Alaska that we're executing. We're trying to grow the LNG business both in the U.S., here in Qatar. So we're trying to grow and leg into a expanding LNG business. So we're all about low cost of supply wherever it's at, gas, oil, U.S. or globally. So we're spending about $12.5 billion annually right now, trying to grow and develop the company over the long haul. So we take a very constructive view of what this business is going to look like, and we're leaning in to longer cycle investments today and investing in our shorter cycle shale investments as well.
I mean, if you look at increasing LNG production in the U.S., what does it mean for countries like Australia and Qatar?
Well, I say it's, you might think we're competing, but we're really cooperating a lot because the natural market for the U.S. LNG is primarily into the European markets. And then Qatar is equidiscally blessed. They can go to the Asian markets and the European markets. So they're supplying some of the Asian markets while the U.S. is supplying the European markets. So really it's about a partnership and working together. I think an amazing stat, you look over the next decade and beyond, between the U.S. and Qatar, will probably be supplying 50 to 60% of the world's LNG needs going forward. Now, I hope Australia gets better. I mean, now we're talking in a place of all about export controls sitting in Australia. So it's really an amazing sort of juxtaposition of what's happening today. And I hope Australia wakes up and does something different going forward as well.
President Trump has been very clear that he wants, lower oil prices, or at least at these levels. How much does it complicate it for a country like Qatar that has a link to LNG to oil prices, which, for example, U.S. producers don't?
Well, it's interesting. You can link LNG to whatever you want to. Basically, it's going to take a certain price to get a competitive rate of return on the infrastructure that you're building. So Qatar likes to oil link their prices. In the U.S., it's typically linked off a Henry Hub plus some margin uplift. But at the end of the day, it almost doesn't matter because it takes a certain price to incentivize us to build this infrastructure, build the ships required to transport it, and then get a competitive return on those investments. So I don't see that as a lot of competition. And if you have lower prices, you need a higher slope in an oil-linked contract. Or in the U.S., we need a certain margin to get incentivize the investments in the capital.
Ryan Lance, thank you so much for joining us today. That was, of course, the Chief Executive of ConocoPhillips. With that, Pretty, I'm going to send it back to you in London. We'll have plenty more throughout the day here in Doha, Qatar.
Francine Lockwood there with the CEO of ConocoPhillips, Ryan Lance, giving us a little bit of insight on how he sees the world. We thank you so much. Coming up on the program, a look at what else is making headlines around the world. We're going to dive into it. Stick with us. This is Bloomberg.
Africa has been silent in telling those global stories. And that's where we have a mind full of stories that we can mine and mine and mine for years to come. And I think investors realize that, and they understand that there's real potential. And as I said earlier, independent films are making a huge comeback. So you're looking at your $5 million movies, your $6 million movies, and this film fund that we're setting up is looking at films, we're looking at financing films between a budget of $2 million to $8 million. So we truly believe that we will get a return on investment. And it's about managing expectations. We're not saying to investors we're going to go out there and we're going to sort of start making films that are going to bring you $1 billion return on investment. That's not to say there can't be outliers. The world has seen this happen time and time again.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
This is Bloomberg Brief. I'm Kriti Gupta in London. Time now for our front page news. A look at what's making headlines around the world. First up on the Financial Times, Chinese battery giant CATL surging in its debut in Hong Kong. It was the world's biggest listing this year by raising $4.6 billion. Despite being blacklisted by the Pentagon, CATL supplies batteries to top-tier customers such as Tesla, Volkswagen, Ford, and Mercedes-Benz. Next up on the Wall Street Journal, House members plan to try to advance President Trump's agenda of tax cuts and spending reductions. But this party is still split. Trump planning to speak to the broader House Republicans conference today on Capitol Hill, according to sources. Disagreements remain over three major issues: cutting clean energy tax breaks, lifting the SALT cap, and Medicaid work requirements as well. And lastly, the New York Times leading with the Justice Department charging a Democratic House lawmaker with assault. Representative LaMonica McIver was charged over her actions with immigration officers outside a private detention center. McIver, in a statement, said the charges were, quote, purely political. Coming up, we focus right back into the markets. Wells Fargo, Eric Nelson, looking at dollar weakness in the second half. How do we navigate the deficit story and the trade story in that conversation? Stick with us. This is Bloomberg.
We're micro investors. So as micro investors looking to invest capital, whether it's in private equity or in direct lending, what we're looking for are opportunities to deploy capital at attractive risk return. When we wake up in the morning, we don't seek to avoid risk. We seek to price it correctly. And so in an environment like this, for sure, if you're looking at a portfolio company opportunity, when you think of the value creation plan, you're factoring in now the uncertainty, which undoubtedly will impact the extent to which you're willing to pay for that asset. Now, in our existing companies, in our existing portfolio, the vast majority are services company. And services companies don't have basically the input issues. But I will say that when we look and we roll up all this data for all of our portfolio companies, and it's quite rich, it's just down now below 1 million employees globally around the world. We're 2,300 at Carlyle itself. But in our portfolio companies, we roll up this data every month. For example, the inventory component of PMI was up about 4 points. I know that's not really news that anybody probably would have focused on, but we could see that happening months ago. So immediately when it looked like the new administration was going to come in and there was the possibility of tariffs, you could see purchasing managers immediately mobilizing to start bringing goods in faster because of the uncertainty factor.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
From our headquarters in London, welcome to Bloomberg Brief. I'm Kriti Gupta in for Danny Berger. Let's set your agenda. Stepping aside, President Trump says Ukraine and Russia would begin ceasefire talks soon, but possibly without the United States leading the charge. And POTUS on Capitol Hill, the president plans to rally House Republicans to unite behind his tax bill as Speaker Johnson fails to reach a deal. And mounting risks, Jamie Dimon warns against complacency as economic concerns pile up. David Rubenstein joining the chorus on those U.S. deficit risks. Let's get a quick check on these markets here. As investors digest all of the things we just mentioned, you are seeing futures on the back foot this morning. NASDAQ 100 futures seem to be where the pressure certainly is. S&P futures, E-minis, down about 0.4%. Of course, Russell 2000 futures also taking a little bit of a hit. A quick check on the bond market as well. As, again, those deficit concerns start to freak out the long end. Take a look at this. 30-year yield marginally moving higher in terms of the sell-off there and a bit into the front end of the curve. What does that tell you about assuaging those fears? My guess is not very much. For some more stocks that are moving at the moment, before we dive into that deficit conversation, Bloomberg's Joe Easton joins us this morning. Joe.
Hey, Critty. So a bit of a mixed picture in terms of the Mag 7 today. We are seeing a few of the stocks gaining and a few of them declining, but Google, Alphabet, the one standing out. This is because there is a big AI conference coming up, actually starting today in California. They're going to roll out or show us what they're going to roll out in terms of their AI generation, the Gemini product. Will that be incorporated into the phone, into the other parts of their services? Keep an eye on that one. Then we've got United Health, again yesterday of around 8%, continuing to trim that drop that we saw following news of that criminal probe related to Medicare. We've seen the CEO picking up around $25 million worth of stock yesterday. That is helping to boost sentiment. And then finally, UBS sliding in the pre-market on a Bloomberg report saying the company is actually struggling to relieve some of the issues related to their capital holdings. They're going to have around $25 billion on the books. This all a consequence of that takeover of Credit Suisse a couple of years ago. But UBS slipping around 2% in the pre-market this morning. Critty.
Fascinating one. UBS really trying to fight the curve when it comes to some of those capital requirements. Bloomberg's Joe Easton walking us through some of those early equity movers. We thank you so much. Let's broaden this out, though, and talk about, I think, maybe the looming risk across the stock market, the bond market, certainly what caught everyone's eye last Friday into the weekend, which, of course, was the Moody's downgrade. These concerns around a ballooning deficit over in the States. But let me just bring your attention to something that kind of caught my eye over in Japan, which I know it's not something we talk about very often on this show, but let's do it. The Japanese 20-year auction. Now, on first look, this is a very nerdy topic to keep your eye on, but the bid to cover ratio, aka the demand that you saw for the long end of the Japanese curve, the worst since 2012. Why do we care about this? Well, we care about this because this is ultimately the same deficit story in the States that freaked everyone out on Monday, that is freaking the other side of the world out this time around. And you are seeing it because a good chunk of the world, I should say, is dealing with those deficit concerns. The U.S., Japan, we'll throw Europe in there as well. So how do you trade it, especially when those trade worries are looming in the background as well? Eric Nelson, macro strategist at Wells Fargo, has all the answers. He joins us around the table this morning. Eric, I'm confused. Donald Trump is going to Capitol Hill today. He's trying to get this tax bill across the finish line. He's trying to get these tax cuts across the finish line. And yet, the deficit is still a concern. But isn't this the exact conversation we had 2 years ago, September of 2023? So why does the market care now?
Well, a lot's changed in 3-4 months, right? This was, I'm old enough to remember when we were talking about 333, Scott Bessent getting the deficit down a couple percentage points.
You're that old?
Yeah, I know. So obviously the conversation within Capitol Hill and the executive has completely changed around, and certainly we can put sort of the Doge being a huge needle mover on the deficit kind of behind us. So why now? Well, it's, growth in the U.S. is slowing down. Obviously we have some concerns around people globally kind of moving away from U.S. assets. And the U.S. sort of Congress, executive are all just kind of collectively saying, let's go ahead and push on with 7% deficits for the next couple of years. Let's forget, about big spending cuts and reining in taxes. So it's a very different conversation. There's not a lot of interest here, even from some of the hardliners or people who are kind of borderline hardliners on bringing deficit in. So, that lack of regard has really become full circle and is front and center. And it was certainly highlighted by the Moody's downgrade on Friday, even if that wasn't sort of old news in terms of the actual change.
So does that just mean, just from an investment standpoint, you don't want to touch the long end of the curve in any jurisdiction?
Well, I shouldn't, maybe not any jurisdiction. I think we have to take into account both the fiscal side, but also what the central banks are doing, right? So if you look at, say, a country like, Germany, the fiscal deficit shift there is long awaited. It's also kind of a textbook case for where you want stimulus, right? Underutilized capacity, unemployment kind of structurally high. You're looking at a very different situation there than, say, in the U.S. where, again, growth is slowing. There's the case for continued fiscal stimulus at these levels is less obvious. Also, on the central bank side, let's look at somewhere like the UK. Right? The Bank of England is still actively selling gilts, which is kind of remarkable when you think about it. And the BOJ is ramping up QT as well. So not terribly surprising to see long ends there underperforming.
But that's, the core of the concern on the back end of the curve. Does the BOJ take a step back, for example, to set the tone for the rest of the world? But let me play devil's advocate if I can. Could these concerns be overblown in the idea, and Bloomberg Economics put some analysis out this morning, that they can't actually quantify the tariff impact or the impact of DOGE just yet? So the argument that the president and his administration is making that these tax cuts will ultimately be funded by tariff revenue and spending cuts from the federal government, is it fair to say that that's still a possibility?
It's possible. I guess, two questions kind of come about, especially when we think about the tariff revenue as a contributor to the fiscal outlook. One is, how long are these tariffs going to remain in place, right? And this is a question that's on the minds of the CBO. It's also on the minds of foreign investors and just investors everywhere, right? Can we count on this revenue over the life of our investment or over any sustained period of time? The second is, what's the growth impact? Is it negative enough where it's going to make a difference on actually pushing spending higher on things like unemployment, so on and so forth? So it's not a straightforward picture with just, higher revenue from tariffs. That's great. That gives us more sort of repayment power.
From an investment standpoint, though, from just kind of a trading macro allocation standpoint, if you are set, not you, but if an investor was set on the idea that the deficit is going to be around for some time, and you're concerned about the growth picture, which seems to be the consensus on both ends, when does that kind of bond-dollar correlation snap back, given that right now, directionally, they're moving in opposite directions?
Yeah, I think it will, ultimately, the question here is, what's driving the dollar in terms of across the curve, what part of the yield curve? And it's always and everywhere the front end. When it comes to FX, you want to be thinking about 2 years and in. So what's the Fed doing? What's growth doing? If growth slows down meaningfully in the U.S. and we see maybe not even a recession, but just a 1% or 0.5% real growth rate as opposed to 2 to 3%, the dollar's going to come down on that. And that's really what's driving our dollar weakness forecast in the second half is just a cyclical slowdown. U.S. exceptionalism continues to fade, and the rest of the world does, relative terms, okay. Thinking about more of the long end and the relationship to the dollar there, everyone always asks, are we going to see Liz Truss? Truss's name always comes up. We always have to keep in mind the LDI undercomponent of that crisis in 2022, which you just don't have in the U.S. So can we see some sort of weird ructions short term? Sure, but are we going to see 150 basis points in 30-year and a 10% drop in the dollar? I'm not so sure.
Eric, as you were speaking, we got some headlines coming out of the EU. They're approving the 17th sanctions package against Russia, one that targets the shadow fleet, hybrid threats. This has been in the works for some time as the EU doubles down on some of the pressure on Russia as well, which brings about another question of if the dollar is becoming less exceptional and these fund flows are kind of finding their way into Europe, how sustainable is that?
Well, I think it's perfectly sustainable. I just think it takes a long time. Right, so we talked to a lot of big, asset managers and people who are kind of driving some of these big flows. The general sense is we're talking about it. We're not taking significant or quick action, right? And that's really the key. I mean, if you look at performance, allocations, et cetera, over time, the general trend has been moving away from domestic markets and moving toward the U.S. So I think the reallocation away from the U.S. comes in the form of, yes, to some extent going into Europe, equities, bonds, but also just bringing money home, whether that's Canada, Japan, or elsewhere.
Bit of repatriation into folding into the market narrative. Eric Nelson of Wells Fargo giving us a broad swath of his views on the stock market, bond market, and of course the FX market as well. We thank you so much. Let's go right back to Doha now, where we are live at the Qatar Economic Forum. Bloomberg's Jumana Bersachi speaking to a panel on the balancing of risk and reward in the financial markets. You can also, of course, tune in LIVE Go on your terminal. And a quick programming note, the government of the state of Qatar is the underwriter of the Qatar Economic Forum, powered by Bloomberg.
The Trump administration doesn't like, quote unquote, governments to meddle too much with their currencies. And in Singapore, it's a special case because you set policy via currency. And I just wonder to what extent that has to be factored into your decision making in an environment where the dollar seems to be persistently weakening.
So we manage according to a basket, and so it's not primarily the US dollar, so it's quite a diversified basket of currencies that we manage against. We manage it against a band, and we're on an appreciating slope of that band. So generally the Singapore dollar is appreciating against our trading partners. And there's room within the basket for volatility, so we're not overly concerned about the bilateral exchange rate with any one currency pair. And so there is room for us to manage within that. And generally, over decades, we have built up credibility in our monetary policy regime that market participants will take our signal, and usually the market will bring and help us implement that policy and bring us to where we need to be.
Well, Mary, you and I were on a panel in Davos a couple of months ago with His Excellency as well, and we were talking about the outlook for banking this year, and all of the panelists were very excited about the prospects of having a pro-growth administration, what that would mean for the banking sector. And you actually used the term, we've got a war chest that we're ready to deploy. Have you deployed the war chest? How's it going?
Yes, not yet, but I first just wanted to say I really wanted to thank Mayor Bloomberg and all of the Bloomberg administration here for bringing this to be the 5th annual economic forum. It is a really, really important thing, and in many ways Bloomberg is often in advance of the rest of us. And so, and Your Excellency, thank you so much for allowing us to be with you here today for this very important discussion. JP Morgan has been in the region for 92 years. And we serve across 15 different countries. Right after the great financial crisis, we only had about 100 people here. And today, we have 370, and that'll probably be about 500 in the coming year or two. And it's a very exciting place for us to be. And as a matter of fact, I had mentioned we are going to have the JP Morgan leadership team. There's about 700 of us that are going to come and kick off the year of 2026 right here in this great hotel. So I think it is a very exciting time for everybody to be thinking about this. And I think it very much dovetails with all of the conversations that we've had. Actually, the Prime Minister made a great point, which is the World Cup is very much like an IPO of the country, and you can feel it when you're here live and in person. And I think that there's so many things happening in the world where it is a time of great risk, but it is a time of great opportunity, and figuring out how to navigate that is really important. The conversation about the dollar is an equally important one. U.S. exceptionalism has been something that the U.S. is very proud of. But with the world order changing and reshaping itself as people try to figure out where they are, you have $16 trillion worth of foreigners in the U.S. stock market, and just 1% of that is a $160 billion move in the U.S. dollar. So the thoughts of where the dollar goes, you remember back last August when the yen had its short-term movement problems, and the markets had a very unsettling, rattled time period for a day or two, especially over that weekend, August 7th, I think it was. And so these are times where you really have to think about what is the right long-term asset allocation. You have been very strong in your feelings about weathering the storm, thinking about your long-term asset allocation. I don't think rating agencies change what people are going to think about allocating to the U.S. versus Europe versus Asia, and of course here in the Middle East. I think it's what are the opportunities. You look at the GDP growth of the country here, and we've got a 2.5% rate going north. You got a lot of exciting things. You have foreign direct investments, which you have targets of growing quite nicely, and you have to think about that for your overall asset allocation. And you have to think, how many assets do I have?
You can watch the rest of the panel on LIVE Go on the Bloomberg terminal. Of course, programming note that the government of the state of Qatar is the underwriter of the Qatar Economic Forum, powered by Bloomberg. We're going to bring you more markets, more analysis after this break. Stick with us. This is Bloomberg.
Since you mentioned IPOs, I do want to ask you, because trading has been, it's been busy.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah. We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Big egos involved, I tell you. Big egos involved. But I think something's going to happen. And if it doesn't, I'd just back away and they're going to have to keep going. I would say I do have a certain line, but I don't want to say what that line is because I think it makes the negotiation even more difficult than it is.
President Trump speaking there after a 2-hour phone call with his Russian counterpart. The president warning that he's going to back away if the deal is not reached, sparking fears of U.S. disengagement from peace talks between Russia and Ukraine. Let's get a little bit more insight and perspective on this. Bloomberg Russian economy and government editor Greg Sullivan will join us this morning. Greg, is this a win for Vladimir Putin?
Well, that's a pretty fair characterization of this. Ahead of the call, we heard from Kiev that they were demanding a 30-hour unconditional ceasefire from Russia, and they believed that the U.S. backed that demand. But as the call finished up, what we saw was an agreement to negotiate towards a ceasefire, far from the demand that Kiev had made. In fact, coming out of the call, we didn't see any agreements on a ceasefire, any mention of sanctions, or even additional pressure on Russia. Largely what this does is play into Putin's play for time as he seeks to make battlefield gains to strengthen his position at the negotiating table. He's really trying to achieve his demands through military force, and this basically buys him more time. Additionally, we just heard from President Trump there threatening to walk away from the negotiations and leave them to Russia and Ukraine. That also plays into Russia's hands. So in a lot of ways, this was a big win for Putin coming out of these calls.
Greg Sullivan walking us through the readout from Donald Trump's phone call with Vladimir Putin. I should say he's also spoken to Vladimir Zelensky and several other European leaders as well. Greg, we thank you for that crucial context. Let's go inward here and talk about the domestic politics, because over on Capitol Hill, House Republicans failed to agree on the party's landmark tax bill after some late-night meetings. Representatives from high-tax states continued to frustrate House Speaker Mike Johnson, who has a self-imposed deadline by the end of the week to pass the bill through the House. And that, of course, is before Congress breaks for Memorial Day. Joshua Gallo joins us from Munich to walk us through some of these details. Josh, how close are we to a deal? What are the sticking points?
Well, there are pretty big sticking points that are still there, so it's hard to say how close they are to actually resolving this. The main sticking points are that some lawmakers from high tax states like California, New York, New Jersey. They're looking for bigger deductions, bigger federal deductions on state and local taxes. So this is really important to them. Their constituents feel very strongly about it. They have high property values, high property taxes, high income taxes, and they're pushing really hard for this. Right now, the limit stands at $30,000 as a cap, and some of them are pushing for double that. So that's a pretty big movement, and these people have said this is a no-go if you don't raise it. On the other hand, you have people who are coming from lower income areas who have a lot of their constituents who benefit from not only Medicaid, but also food subsidies for children, and those are things that this bill aims to cut spending on. So they're fighting very hard for those, and those go in two different directions. One is going to be a revenue producer. One is not. So Trump is headed to Capitol Hill today and trying to round up the caucus, but I think there's still a lot of work to be done.
A lot of work to be done, certainly, on that deal. Does it assuage some of the market concerns around the deficit, or even kind of boosting some of the consumer spending that we're seeing a slowdown in as well? Joshua Gallo walking us through the details of those conversations due to happen in Capitol Hill later today. Let's go from the politics to the business story. Home Depot shares flat in the morning, in the pre-market, I should say, this morning. The home improvement retailer reporting earnings before the bell, with analysts expecting sales to be under pressure from high prices and tariff fears, not unlike what we heard from Walmart earlier this week, I should mention. Bloomberg Global Business reporter Jennifer Creary joins us now. Jennifer, walk us through what we're watching for when it comes to those Home Depot numbers.
Yeah, well, Wall Street is expecting it to be a slow start to the year for Home Depot. Now, the key metric to look at is comparable sales. Now, they're expecting that to soften in the first quarter, falling 0.2%, and that comes after Home Depot finally turned positive in Q4 after 8 consecutive negative quarters. Now, two main reasons, first being weakening consumer sentiment, of course, over how fast-changing tariff policies will affect the price of home products. Of course, they're getting more expensive. That's going to squeeze already tight household budgets. Now, the second being high interest rates and high home prices. And that's what's really slowed down spending on projects. Consumers simply aren't moving or buying homes as much as they used to. Now, it's not all bad news. Some optimists are pointing to the fact that, Home Depot said that, half of its merchandise is manufactured at home, so it's probably not as exposed to tariffs as other retailers. But, of course, it's going to be a long road ahead for the retailer.
Not unlike what we heard from Walmart. Home Depot and Walmart very much positioned close to each other for that DIY customer retail audience. Jennifer Creary joining us this morning with a preview of those earnings. Coming up, we're going to get you set up for your trading day with more Fed Speak and more about the earnings coming up next. Stick with us. This is Bloomberg.
Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Now look at what is coming up ahead today. In the earnings picture, Home Depot is going to be reporting before the bell. We have our eyes on that. Of course, the tariff impact. The Atlanta Fed's Financial Markets Conference kicking off in Amelia Island with President Bostic's opening remarks at 9 a.m. Eastern. And Bloomberg Technology live from Dell Technologies World in Las Vegas. That happening at 11 a.m. Eastern. We will bring you full coverage. In the meantime, I'll leave you with a quick check on these markets. Weakness when it comes to the futures picture. S&P futures down 0.4%. NASDAQ down about 0.5%. And the 30-year yield at 4.92. Euro dollar at 112.54. That does it for Bloomberg Brief. Surveillance is up next. Stick with us. This is Bloomberg.
Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, and we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
to go through probably many trust moments. This is probably another mini earthquake version of this with the downgrade.
You don't have to be bearish, but boy, it's hard to be bullish.
I don't think that we're looking at a stampede out of treasuries.
We are taking profits rather than rethinking the basic strategy.
I think the worst is behind us, but I don't think the coast is clear just yet.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday as President Trump heads to Capitol Hill, preparing to tell Republicans to overcome division and get behind his tax bill. Just as Fed officials signal they might be on hold until at least September, investors looking for another read on the U.S. consumer. Earnings from Home Depot dropping right now.
Yeah, we are getting right now first quarter comp sales coming down lower by 0.3% versus the expectation of 0.2%. They do maintain their fiscal guidance. As we parse through all of the details, we are seeing margin expectations come in lower. The key question will be, how will they offset some of the tariff pressures? Will they sort of repeat what we heard from Walmart in terms of increasing prices, just maybe not referencing the reason why, which is potentially tariffs?
Stock is down 1%. Lisa nails it, as always. It's the commentary about pricing, retaining your customers, maximizing your profits, and don't blame it on the White House. Otherwise, the president might have something to say.
Well, exactly. You want to be very careful about how you talk about policy coming out of Washington when you have a president that has no problem taking to Truth Social or a press secretary going to the podium and blasting a company. We saw that with Amazon. We've seen that over last week when the president was traveling with Apple. So you have to really read between the lines when these companies come out and talk about how tariffs might impact their bottom line, and also if it means they're going to pass on that cost to consumers.
We know consumer sentiment is rock bottom. We've seen that in survey after survey. We've seen it in surveys in the past week. It's about whether you start to see it in the hard data and the earnings.
Because right now, when we talk to people who oversee credit card portfolios, they're not necessarily seeing it, whether it's MasterCard or whether it's Bank of America. What's interesting is how some of these companies are managing it. With Home Depot, what you are seeing is inventories for the first quarter up dramatically. That's not a shocker. How much are companies doing this? And they are eating it, to use the phrase du jour, a bit on their margins, with margins coming in and expected to come in for the full year. Key question will be, especially for the housing industry, it's still sluggish. So are people going back to renovating rather than just simply buying a new home, given the fact that you've got high prices, you've got high rates, and things aren't bad enough to be good when it comes to the rate picture for a lot of the housing market?
Do you remember the Moody's downgrade?
No. What are you talking about?
What Moody's downgrade?
24 hours Moody's downgrade.
Are you Moody?
What an unwind in this market in one afternoon. The bond market this morning, by the way, totally unchanged, 445 on 10s. But some of the moves worldwide, eye-catching. Through 5% on a 30-year in America, the highest yield we've seen going back to 2023. In Japan, the highest yields we've seen on a 30-year when that maturity debuted going back to 1999. It's not just the US, it's Japan too. There's fiscal challenges worldwide.
So you have to watch bond auctions everywhere, not just in the United States, because you had a bond auction that was one of the worst auctions in decades in Japan. And by the way, this fiscal issue is not just a United States issue. This isn't just a Sell America issue. In Japan, you not only have deficits that are significant with some of the leadership, including the prime minister, saying that it rivals Greece, that it's worse than Greece. You're also seeing the fact that the Bank of Japan is pulling back in the face of some of the inflationary pressures. This is a global story. It's not just Sell America.
We're focused on the US side of things, that's for sure, as the president heads down to Capitol Hill to try and rally Republicans to get behind his tax bill.
The closer going to the Capitol. Speaker Johnson wants this bill on the House floor. So through the Rules Committee, 1 a.m. Wednesday, and then on the House floor before Memorial Day. So who better to come and really start pushing these Republicans to get in line? This is a very tight rope that Speaker Johnson has to walk. Last night, there was no deal on SALT as he met with New York Republicans and a California Republican. That is what lingers. But any concession he gives to one group, he then has a whole host of headaches with another group. And that's the problem right now.
We'll head down to Washington in just a moment. Tyler Kendall standing by. Coming up this hour, we'll also catch up with Ed Yardeni of Yardeni Research, warning of a potential bond market meltdown. Alex Norrister of the Cato Institute as Trump heads to Capitol Hill, and Priya Mishra of JP Morgan on fiscal sustainability risks. We begin this hour with stocks and bonds steady as traders look past the latest U.S. credit downgrade. Ed Yardeni of Yardeni Research writing, bond prices might melt down if the bond vigilantes are roused by the downgrade downgrading of the US sovereign debt rating and or the prospect that Trump's tax cut bill worsens the federal budget deficit. Ed joins us now for more. Ed, welcome to the program, sir. It's good to see you. Good to catch up. Let's get to this call, this bond market. What is more likely in your mind, a bond market meltdown or a stock market melt up?
Well, my mind changes on that issue day by day, depending on how the markets are actually performing. Look, the 10-year is actually hanging in there at 4.5%. But as you said, there's some very unsettling developments going on in Japan right now, as an example. And there's more and more talk about a Liz Truss moment in Japan and even in the United States. That's what happened back in 2022 when the UK Chancellor decided to have a very loose budget and the bond vigilantes reacted badly. It almost feels like, bond vigilantes of the world unite. As you said, it's a global bond market now, and this fiscal problem that we're facing in the United States is also one that they're facing in Japan. And the way things are going, looks like Europe is going to be entering that stage as well. So I would say on a near-term basis, it's more like watch and see. I don't want to kind of ring the alarm bells and tell you that we're going to have an imminent meltdown. People like Ray Dalio have been saying that for a while, and it hasn't happened. And you have to remember, the Treasury here in the United States has demonstrated November 1st of 2023 that they can play games here. They can simply issue more bills and fewer bonds and notes. And that's what happened on November 1st of 2023. And the bond yield hit 5% and didn't see it again for quite some time. Hasn't seen it since.
And how much comfort can you take from the buying that took place yesterday? That when we do see yields back up, particularly through 5% on a 30-year, we struggle to close at those levels. That level gets bought. How much comfort can you take from that?
I take a lot of comfort from that. First of all, there's this notion going around that there's going to be a buyer's strike and suddenly we're going to have these auctions where nobody shows up. That's just nonsense. We're always going to be able to sell these treasuries. The question is at what yield, and will that yield be prohibitive enough to cause a recession? I think right now we're kind of in the, let's be on the alert, let's kind of the yellow zone. We're not in the red zone on this issue.
How much are you looking at the potential for stocks to be more of a haven than bonds, and stocks to continue to perform, particularly when it comes to some of the big tech names, even if yields stay where they are right now?
That's a great question, and I think the answer is in the performance of the market since April 8th. That was the bottom of the correction. For February 19th to April 8th, we had something like an 18% correction in the S&P 500, and it's been a V-shaped recovery ever since, and leading the way have been the Magnificent Seven. And one of the reasons they're magnificent is they don't have that much debt and they have a lot of cash, and they're generating lots of earnings. So I think there's something to be said for the Magnificent Seven being a valued asset class again. And that, by the way, also helps the dollar because foreigners have been big buyers and then sellers and now maybe buyers again of the Magnificent Seven.
It feels as though the word risk is being turned on its head, where stocks might be less risky than bonds when it comes to bond vigilantes uniting around the world. Yeah. And potentially you could see a scenario where even emerging markets end up outperforming developed markets because they've already had this reckoning. They've already had sort of the fiscal restraint thrust upon them by years of volatility and higher costs. Is that something that you see transpiring, that suddenly the risk was going to lie in developed market sovereign debt and potentially even just beyond bond markets and not so much even in emerging markets?
Well, I think we clearly have entered a very volatile period right now, and it's pretty hard to get all the twists and turns of these markets, and which are driven by the twists and turns of politics in Washington and other places. I think that there is a potential here for the bond market to for the bond vigilantes to saddle up and to basically say that the deficit solution that the administration comes up with here in the United States is not sufficient, and that there could be a protest with the bond yield jumping up to, 4.75%. Maybe that'll do it. Maybe it'll take 5% again. But we have to get the attention of the politicians. The bond vigilantes have to get the attention of the politicians. And this may be sort of that moment. And it could all kind of unfold in a 2 to 4 week period where the politicians suddenly see the light that the bond vigilantes really are checkmating what they can do.
Well, you talk about the prospect that the tax bill can worsen the federal budget deficit. When you look at the Committee for a Responsible Federal Budget, they say this is going to add $3.3 trillion to the debt over the next 10 years. What do you think the bond vigilantes have to say about 3.3 over 10 years?
Well, they're definitely getting twitchy. But look, again, I think it's very important to realize that the bond vigilantes are not the only players here. The Treasury can play games with, I call it yield curve control, is sponsored by the Treasury instead of the Fed. The Fed, if this becomes a financial panic, could come in and buy bonds. So I think it's important to realize that there could be a lot of volatility. It could get panicky again, but I think you have to look through it all. I think any panic that occurs, to the extent that it does lead to a political response that calms the situation down, would be a buying opportunity, and that's kind of the way I look at it now. I'm not in the Ray Dalio camp that believes that we're heading towards a debt crisis and it's something that's just structurally going to kind of bring the system down. I think that we could have a debt crisis scare, and that could actually create some pretty positive reactions out of Washington. Maybe it's wishful thinking, but it beats the alternative.
Ed, can we put some numbers on those words? Panic, scare. What does that look like in fixed income?
Well, you know, I think if we saw 5% again, that would get everybody's attention, especially if it goes to 5% and then 5.25%, and it doesn't come right back down as it did in 2023. I think 2023 was really an example of what could happen. That was sort of a mini debt crisis, but that was resolved with Janet Yellen telling the bond vigilantes, you don't want me to issue any more bonds or notes? Fine, I won't. I'll issue bills instead, and that worked really quite well. But inflation was also turning out to be more moderate than expected. Up ahead here, if we sort of see this supply-demand issue come to the fore and the bond vigilantes really get upset about the lack of fiscal discipline coming out of Washington this go-round, then it's really quite conceivable that with inflation likely to be a problem up ahead here, that things could get a little testy here going into the summer.
Ed, appreciate your take. As always, sir, it's good to catch up. Ed Yardeni there. Of Yardeni Research, the man who coined the phrase, bond vigilantes. The 10-year this morning, 445. Max Kettner over at HSBC talking about the danger zone for equities, calling that 470.
Yeah, and that was really something that we heard from Ed Yardeni too, saying maybe 4 3/4 was the danger zone. What strikes me is how can anyone buy a 30-year treasury when no one can understand the framework? And we just heard that from Ed Yardeni, who specializes in frameworks and says that he changes his opinion from day to day with the different twists and turns that we see in Washington, D.C.
Yeah, bond market meltdown versus stock market meltdown are two very different stories, aren't they?
Yeah, coin flip.
Priya Misra at JP Morgan Asset Management joining us a little bit later to talk about fixed income. Look out for that. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. Home Depot shares are rising 2% in the pre-market. The home improvement retailer reported first quarter earnings that missed analyst estimates, but reaffirmed its guidance for the full year. The company's CFO noted a drag on sales in the winter months due to weather conditions, weakening consumer sentiment, and economic turbulence, but saw improved demand in March and April. Meanwhile, President Trump is heading to Capitol Hill later this morning to try and seal a deal on his big, beautiful bill. Trump has told GOP holdouts to, quote, stop talking and get it done. But there is still disagreement over the bill's tax breaks, cuts to Medicaid, and green energy programs. Even if the bill passes the House, it will face an uphill battle in the Senate. And Qatar's prime minister rejected criticism of his country's offer of a $400 million luxury jet to President Trump. He defended the gift as an exchange between the two countries. White House Press Secretary Caroline Leavitt said the plane will be retrofitted to the highest of standards by both the Department of Defense and the U.S. Air Force. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next on the program, the president goes to Capitol Hill.
Looking to get the one great, big, beautiful bill. It'll be the greatest tax cuts in history. If we don't get it, that means the Democrats will have stopped us.
We'll get into those very fine margins down on Capitol Hill in just a moment with Alex Norristar of the Cato Institute. Live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The S&P posted a 6-day winning streak on the S&P 500 just yesterday. This morning, pulling back by 1/4%, wiping out a 1% loss in yesterday's session. Big turnaround in fixed income too. The 30-year yield yesterday, a 13 basis point trading range, finishing the session lower by something like 4 basis points. This morning, up by 2. We're back to 492 with the tax bill very much in focus. Under surveillance this morning, the president goes to Capitol Hill.
Looking to get the one great, big, beautiful bill. This will be the greatest tax cuts in history. If we don't get it, that means the Democrats will have stopped us, and that means people will get a 68% tax increase, the largest in history. And if we do get it, we're going to have the largest tax decrease in history.
It's the latest this morning. President Trump heading to Capitol Hill to push House Republicans to unite behind his tax bill as lawmakers remain divided on key issues. Bloomberg's Tyler Kendall joins us now for more. Tyler, welcome to the program. What are those key issues for the president today?
Yeah, hey, John, good morning. Well, while Republicans have pretty broad agreement when it comes to the tax cuts at the heart of the package, there are still some really big questions here about the future potential impacts to benefit programs like Medicaid and also what's going to happen to lifting the SALT cap. In fact, we know that the members of the so-called SALT conference have been lobbying for President Trump to get involved in these negotiations directly. Congressman Mike Lawler said as much on this program last week. And this group of lawmakers from high-tax states even met last night with House Speaker Mike Johnson, but they emerged without any progress on a deal, though they did say they were offered multiple proposals. At the heart of this is that fiscal hawks say if there's going to be a more meaningful lifting of the cap, there has to be more savings policies, whether that is spending cuts or revenue raisers. And the sense here in Washington is that Republicans are really coalescing around the idea of moving up those work requirements for Medicaid from 2029 to 2027. But still, these members of the House Freedom Caucus are pushing for some more aggressive and in some cases controversial changes, including potentially changing how the federal government allocates money to states to put into place Medicaid benefits. So still some really big open questions here. The sense is that President Trump is going to urge these Republicans to move this legislation along, because at this point it's just going to come back around when the Senate makes its own changes. And John, at this point though, really doesn't seem like any of these lawmakers are going to back off of these policy fights as they really dig in their heels on their respective issues.
So the president wants to close a deal today, at least to get this measure to the House floor, first through the Rules Committee, of course, 1 o'clock in the morning on Wednesday. Then you mentioned the Senate. What are the discussions right now in the Senate for the pushback they're going to have with the bill the House is going to send over?
Right, there's a few really key issues that we're going to be watching closely, and they have really made clear that they're going to make some significant changes. One, of course, has to do with any potential impacts when it comes to Medicaid. This is something that Senate Republicans have already signaled that they're going to be reluctant to make changes to the program, including when it comes to the acronym known as FMAP, that formula that really determines how much federal money ends up going to the states to allocate it out in this program. The second is I would also watch closely the future of those clean energy tax credits under the Inflation Reduction Act. We've already heard from some senators a reluctance there to speed up phasing out or even phasing them out completely, as they really want to look towards the private sector that has been able to capitalize on these clean energy tax credits. And then just quickly, lastly, I mentioned we haven't even gotten into the fact that we are expecting an increase to the debt ceiling to be linked to this proposal, and there's already some pretty big differences in the numbers that both these chambers want to see there, with the House urging for a higher lifting of that cap.
All the things we enjoy in Washington. Tyler, looking forward to your reporting down in Washington, D.C. Joining us now is Alex Norista of the Cato Institute. Alex, welcome to the program. Your line on the tax bill. The tax bill is advancing through Congress. It needs a makeover. What kind of makeover does it need?
Yeah, I need a substantial makeover. I mean, listen, they've added in 20 extra tax preferences. They've undermined simplicity in the bill. They have added in stuff like the no tax on tips. They're not phasing out the IRA quick enough. What they really need to do is return to a lot of the key principles that made the 2017 TCJA such a success. You know, go back to full expensing, make sure that starts immediately, and phase out the IRA. Clean energy spending immediately. If they don't do that, there's going to be a bonanza of tax credits going out the door in the first year or two before it fully expires, and they really need to start bending the cost curve on things like Medicaid. I mean, we keep talking and hearing about these cuts, but so far what we really see is just reductions in the rate of increase. We need to start getting serious about this, or otherwise the tax reform is going to be much less impactful than it was before.
Alex, let's first start with the IRA. A lot of congressmen and women and even senators are saying they need those tax credits because businesses already started to make plans based off those grants from the prior administration. Are you saying they should cut them immediately, or do you think it's appropriate to have a phased out approach?
Well, I think we need to cut them immediately. I mean, they're very economically irresponsible. It will hurt a few businesses, of course, who have made decisions and business decisions based on the IRA, but those are just a great example of why we can't have these types of bad laws going forward, is that they are economically inefficient, they are very expensive to the taxpayer, businesses and consumers make plans on them, but they are fiscally unsustainable. My colleague Travis Fisher did a fiscal analysis of the IRA out through 2050 beyond the budget window and estimates between about $2.5 and $5 trillion of outlays, which is somewhere around 10 times what the CBO originally estimated the cost of the bill to be. So this is just, it's too expensive. We can't afford it. We're running deficits way above what we should be running with this amount of economic growth, and it's fiscally unsustainable. It's totally worth cutting, and we should have done it. We should have never passed it in the first place, frankly.
You also think that Medicaid, they should at least loosen up or restrict some of the access to individuals that get on Medicaid. Isn't that really, though, kind of a third rail for Trump? He said he really doesn't want to touch any of these entitlements.
No, that's absolutely right. Politically, it's very difficult. I mean, President Trump, as well as senators like Josh Hawley of Missouri, who's a Republican, basically will go to the bat to defend a lot of Medicaid spending, and this is really too bad. Medicaid is growing rapidly as a share of federal spending. It is fiscally unsustainable, and the formulas that give grants to the states are very gameable by firms and by state governments on the state level bill where they basically engage in these tax and subsidy gimmicks to get more and more money out of federal taxpayers. And the evidence isn't very good that there's big health benefits from these programs to begin with. So I think that they're great ways to begin cutting back. But when they talk about, for instance, work requirements, I support them. I'm in favor of those. But they're really not going to do a huge amount to lower those costs. They're really like the opening salvo. But to bring down the cost, you really have to go after FMAP. You really have to go after the amount of money going from the federal government and from federal taxpayers to state governments. And there is just not that much enthusiasm for doing that, unfortunately, in the Trump administration.
Alex, appreciate your time as always. We'll catch up again soon. Alex Norista of the Cato Institute on the tax bill coming together down in Washington, D.C. We'll catch up with the chair of the Council of Economic Advisors in the White House a little bit later on this morning at 8:15 Eastern Time. I just want to understand, does anyone walk into the negotiations with the 30-year yield and say, look, we've got a problem, we need to do something about this?
You literally read my mind. My one question is, how often do you check yields, and which yields are you watching most closely, and how much is that a subject of conversations? Because ultimately, as we heard from Eddie Ardeni, that could be the ultimate check. I also am wondering, does Donald Trump have the same kind of ability to get everybody together when there isn't a sense of exactly how? And it's a little bit harder to say, just do it, get the votes done. And they're like, well,
Steve definitely checks the bond screen, because yesterday he had a call with reporters and there was a question about what was going on in the bond market. He said, well, actually, I just checked now when we're back to unchanged. So Moody's is a lagging indicator, basically repeating what the Treasury Secretary had to say.
And the Treasury Secretary was right based on the price action yesterday in the bond market. The 30-year yield, 492. Yields high by just 2 basis points this morning. Up next on the program, another read on the U.S. consumer. Drew Redding of Bloomberg Intelligence as Home Depot reaffirms guidance, adding the company won't pass along tariff costs from New York City. That's up next. You're watching Bloomberg TV.
What makes it India's time?
It's us women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining, whether it is in sport, whether it's in medicine, whether it's in creative arts. They are everywhere. And I have so much positive energy that comes back to me when I'm talking to Indian women. And I just think at all these little girls and boys, I don't want to discriminate, who are now in school-going age. Imagine once education, sports, we empower them. What a difference they would make not only to India, but to the planet and the world. and the world needs it now than ever before.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly. There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
6 days of gains on the S&P 500, a morning of losses so far. Mild ones, we're down by 0.25% on the S&P. On the Nasdaq 100, we're down by 0.4. Over those 6 days, again, more than 5% on the S&P 500 and up almost 20% from the low on April 8th. A phenomenal rally in this equity market, wiping out a 1% loss at one point in yesterday's session. Big turnaround in fixed income as well. On a 30-year yield yesterday, a 13 basis point intraday range. Just ridiculous. 492 this morning, yields higher by a basis point or two. But as Lisa and I were talking about at the top of the hour, this is not just the United States. It's Japan. It's other nations too. And Japan in focus again. Look at this move. Japanese bond yields on a 30-year maturity, the highest we've seen in some 26 years. 310 on a 30-year yield, up by 13 basis points this morning, and some yen strength kicking in. Dollar yen down to 144.56.
And this came after the weakest auction of bonds in Japan, going back more than a decade. And the real concern here is really reminiscent of what we're talking about here in the United States. You have the Bank of Japan pulling back and not supporting the long-term bond market at the same time that you have pretty significant deficits. You have questions around inflation. And suddenly, you have this real question about the sustainability of a developed market economy that was once considered one of the stalwarts and the havens in the global market.
Top tip for any official out there, if you are potentially facing some fiscal problems, don't refer to Greece and say it might be worse than them.
I mean, honestly, what was he thinking? The Prime Minister came out, and that was on Monday, yesterday, and said this. And some people were saying that things were getting a little, to use the president's words, yippy yesterday in the Japanese bond market. That continues today. And you really wonder how much this is a global bond vigilantes unite type of story that could permeate through the rest of this year.
Particularly given some of the supply we might see out of places like Germany, which is where we've not seen a lot of supply, relatively speaking, over the last few decades. The equity market's doing okay. We're down by about 1/3 of 1%, but a big turnaround in yesterday's session, and the winning streak continues. 3 hours away from the cash open. Let's get you some morning movers with Yahara. Hey, Yahara.
Hi, John. We start with Home Depot. Those shares are rising 2%, even though sales fell short of expectations, telling us that unease over the economy did keep people from taking on those home improvement projects. But this could be why shares are rising. Home Depot CFO striking a more positive tone when it comes to navigating tariffs, saying that it's working to diversify its sourcing and that because of that, they won't need to raise prices. Next up, we have shares of UBS. Those are falling 2.5%. The bank had been lobbying the Swiss government to water down a law that would have required it to maintain up to $25 billion in extra capital, but to no avail. We're reporting that it is likely not to win that effort, though it is important to note that the text of the law is not final, so its prospects could still change. And last up, we have shares of United Health. The stock, of course, had been beaten down this year, and especially after the Wall Street Journal reported that it was under criminal investigation. But to date, it's up 3%, adding to 8% of gains yesterday on a vote of confidence from new executives. Both their new CEO, Stephen Hemsley, and the CFO bought $30 million worth of shares. John?
Yahara, thank you. Thanks for the update. More from Yahara in about 10 minutes' time on the news flow out there. News flow just tremendous at the moment. On our radar this morning, our top story, President Trump heading to Capitol Hill to unite the GOP behind his big, beautiful tax bill. House Speaker Mike Johnson attempting to push the package through the House before Memorial Day.
It's a very aggressive timeline. It's going to be incredibly challenging, which is why he had to call the president, the closer, come to the Capitol. Can we get at least this hurdle done in the House? Tyler brings up a great point. Even if they're able to pass this bill in the House, whole set of new issues that are going to happen in the Senate. The issue right now for Mike Johnson, who I'm going to be sitting down with just a few hours after the Rules Committee votes for it. So whether or not he's giddy and excited or he's going to feel a little bit depressed, gets to go back to the drawing board to try to get it out of committee, we'll be able to decide based off his tone and tenor Wednesday morning. He has this really challenging tightrope. Any concession he gives to any group means he has another headache on the other side, whether it's the Medicare group, the SALT group, the fiscal hawks. The margins are just too slim.
This is going to be a much more difficult exercise to try to get everybody together than in previous efforts. And really what's at stake, and Punchbowl put it really well this morning, that it seems like the House Republican Conference has vastly different interpretations of Trump Republicanism and what that means when it comes to either fiscal responsibility, when it comes to pro-business tax cuts, or when it comes to cutting back certain entitlements, even if on the margins. And that's ultimately the reason why there cannot be a consensus, and it's unclear where the president is going to weigh in, or whether he even will, given the fact that he's talked about how he has a soft spot for SALT and for the northeastern states, at the same time that he really does want to make sure that we see some of these other programs put through.
There's a lot of circles to square.
Yes.
I think we're all aware of that. It's difficult to please both the SALT caucus and at the same time the fiscal hawks. And you were right to ask, what is a fiscal hawk these days down in Washington, D.C.? My cheat guide for Washington for any political operation is ambition. What is the ambition of the people involved? They want to get re-elected. If you want to get re-elected, most people believe it's political suicide to cut costs too much, to cut spending too much. There's one man who's not going to be re-elected because he's not running again, and that's the president. And there are some senators out there that will be up for re-election, some representatives of Congress that will be up for re-election, and that will be on their mind in a massive way as they approach these negotiations.
Absolutely. We're just around the corner from the midterms, so they want to get a bill across the finish line that they can go back to their districts and say, I was able to, Mike Lawler from Westchester, raise your SALT cap. What's so interesting about Trump is that we have seen a flip-flop on SALT. He is the one that instituted a $10,000 cap in the first iteration of his administration with TCJA. Now he's come back, Nassau County, on the election cycle, talking about the fact that we need to lift this SALT tax. So I think it really depends, to Punchbowl's point, what faction he's leaning in towards any given day with what priorities he wants to see in this bill.
The good news, Lisa, 30-year, 492. The right side of 5% going into these talks later.
Yeah, it depends, though, who you are, because on one hand, you get the feeling that there are some investors out there who are rooting for the bond vigilantes to call in to check ahead of some of these negotiations. So maybe this isn't enough to call in that kind of fiscal responsibility, but at the same time, looks pretty good.
Priya Misra joining us in about 15 minutes. Look out for that conversation. Speaker Johnson with Anne-Marie tomorrow morning, 9:30 Eastern Time, right here on Bloomberg TV. Let's turn to this story. President Trump saying Ukraine and Russia will start ceasefire negotiations immediately after a phone call with the Russian President, Vladimir Putin. Sources telling us here at Bloomberg, the European leaders feel Trump is disengaging with wider diplomatic efforts.
So this is the quote that stood out to me from the president yesterday. Quote, I think something's going to happen. If it doesn't, I'm just going to back away and they're going to have to keep on going. It feels like he is leaving it in the hands right now of these two leaders, Vladimir Putin, Volodymyr Zelensky, to come sort of agreement that they can at least get to a ceasefire, some sort of process. And basically what Trump is saying, if they can't get there, I'm not going to continue on this battlefield. I'm not going to continue to try to get these two individuals to the negotiating table. I think what's interesting right now, the next question for Washington is really whether or not, if the talks go so sour, if Trump is willing to add more sanctions on Russia.
There's a similarity here with the tax bill, because increasingly there's a real question of how much power Trump has with the rank and file in the Republican Party. We heard Lindsey Graham, senator, come out and say that he's really rallying hard behind a bill to sanction, with potentially even secondary sanctions with Russia. And then John Thune, also a senator, majority leader, also came out and said if the White House concludes that tougher sanctions are in order, we're here for it, and that bill is ready to go. So you have the two sides, a softer take from President Trump and some Republican senators saying, we're not totally comfortable with that, and we're preparing for alternative scenarios.
We spoke to Signum yesterday. If there were two conversations, one between the president and the Europeans and another one between the president and the Russians, which conversation would be the hardest? And he said it was the conversation with the Europeans and not the Russians.
Right, it's a conversation with the Europeans to basically say we need to have some concessions to make sure we get these two individuals at the negotiating table. I think one of those big ones is going to be how quickly you can get European arms to Ukraine, and if there's a ceasefire, do you absolutely just halt them? It's going to be very challenging for Europe. Remember, this is a war on the European soil.
That's the latest on foreign policy. Let's turn to the latest on earnings. Big week for retailers. Home Depot this morning reporting first quarter earnings that fell short of analyst estimates due to weakening consumer sentiment. The company's CFO saying it won't raise prices due to tariffs and reaffirmed its full year forecast. The stock is up on the latter, not the former. We're higher this morning, Bramo, by 2.5%.
Yeah, not only reaffirming, but also this idea that they can potentially absorb prices better than other places. They said that after they rearrange their supply chains, no country outside the U.S. will represent more than 10% of its purchases. So showing how much they can really be resilient, even in the face, potentially, of the proposed levies.
Drew Renning joins us now of Bloomberg Intelligence. Drew, welcome to the program, sir. Just to build up on Lisa's line of thinking, just how insulated is this company from the tariff story?
Well, look, Home Depot purchases about 60% of their products that they sell from North America, about 50% from the United States. Them, just like a lot of other retailers, have done a lot of work over the last decade in diversifying their supply chain away from China. And, you know, you heard Lisa mention that by the end of the year, no country is going to be more than 10% of sales. So they have done a good job to navigate this tariff impact. I don't think they'll be completely immune. I think the comment they made was that they're looking to generally maintain prices. The interesting thing for Home Depot is they sell about 30,000 to 40,000 products in their stores, so they could take a portfolio approach to pricing. So they might not necessarily be raising prices on goods that were tariffed, but they'll look at the elasticities of their various products and raise prices where they can.
I do wonder if Home Depot is kind of a counter-cyclical tell, given the fact that a lot of people who own homes tend to go to Home Depot to get corking or little door fixtures or other types of home improvement projects. Drew, did you get a sense, reading through the transcript ahead of that 9 a.m. call that they're going to have with investors, about what type of consumer demand there is? Is this the good kind, meaning robust, resilient economy, or is this the bad kind? No one's buying homes and everyone's trying to make do with what they've got.
Yeah, that's a great question. And you're right, home improvement generally does tend to be more counter-cyclical. And the reason for that is because there's a large maintenance and repair component to the business. And I think that's really what supported Home Depot in the near term. And you've heard that from them in this latest earnings release, is that they're seeing homeowners take on smaller projects. What we're not seeing and what we want to listen for on the call later today is how are big ticket projects trending, and particularly discretionary products. So think of things like kitchen, bath remodels, flooring projects, which consumers are able to put off. That's really been the area of weakness for Home Depot over the last several quarters. And one of the reasons for that is because these are projects that tend to be financed. So when you have borrowing costs as high as they are now, that's something consumers have put off. So I think in order for that to come back more robustly, you're going to need to see rates come down a little bit.
Drew, a few weeks ago, executives at Home Depot were talking about how some consumers are signaling that this rate environment is the new standard. So do you think there's going to be more appetite for consumers to say, if this is the new standard, at some point, I just got to pull the trigger, get on the property ladder, or do that big project?
Yeah, you know, I think at some point that may be the case, but I think what we're dealing with now is it's not just the high rates that we have. I mean, mortgage rates are back up above 7%. But what we've heard from the housing space more broadly is increasingly cautious consumers, just over the general direction of the economy. Maybe they're more concerned than they have been about their job security. So I think when people are thinking about taking on such a large purchase, whether it's purchasing a home or undertaking a large-scale remodel, there's a little bit more hesitation out there right now. So rates are certainly the biggest component of that, but I think that this consumer sentiment shift that we've seen over the last couple of months is certainly playing a role.
Drew, appreciate the update, sir. Drew Renning there of Bloomberg Intelligence on Home Depot. This line in our story this morning, about 80% of Home Depot's customers own homes, which speaks to the thinking of your questions a moment ago.
And this is the reason why they tend to do well when rates are high and people have to make do and make sure that their, the caulking is solid so they don't get mold in their bathrooms. Not that I'm speaking from personal experience, or, potentially just make sure that their handles aren't falling off certain fixtures and things of that nature.
I'm pleased you broke down the numbers on a serious point. Do you remember on China it was diversify, not decouple? They've diversified, haven't they?
Yeah.
In a massive way.
And it's been a real kind of boon to them in terms of how much they can absorb some of the price shock. You do see margins. The full year operating margin is expected to be 13%. The estimate was 13.3%. So a little bit in on that front. But other than that, they said they don't expect to have to raise prices that much. And it speaks to their ability to do that given the mix of products.
Need some fresh homeowners. Need those rates to come down. Home Depot up by a little more than 3%. I know you feel totally fine. Yeah. We know your position. Don't worry.
Yeah, but I need coffee.
And your 2% mortgage and all of that. Okay, not bitter at all. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. Israel allowed aid trucks to enter Gaza yesterday for the first time in 3 months. But shortly after Israel announced their entrance, the UK, France, and Canada issued a joint statement calling the aid wholly inadequate. They threatened concrete actions against Israel, including sanctions for its activities in Gaza. Meanwhile, the Chinese government has accused the Trump administration of undermining recent trade talks in Geneva. The Commerce Department said it was issuing guidance to make clear the use of Huawei AI chips anywhere in the world is a breach of the U.S. government's export controls. China considers this a discriminatory measure and demands correction. And the Department of Justice has opened a probe into a recent breach of Coinbase. Sources telling us here at Bloomberg investigators, including those in the department's criminal division, are digging into the circumstances surrounding the breach. Coinbase said the hack involved criminals bribing employees and contractors to obtain client data. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, the best bonds in the world.
American bonds are the best buy in the world. They're going to be even better buy once all of our policies are in place. We support what it takes to get the bill through.
Up next on the program, Prem Isra of JP Morgan Asset Management, live from New York. This is Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Live Live from New York City, welcome to the program. Equities just a little bit lighter this morning. We're down by 0.25% on the S&P 500, following a 6-day run and a gain of more than 5% over that period. If you turn to a single name in the pre-market, Home Depot doing okay. Sales came in a little bit light, but we're putting so much weight on the outlook, the confidence that any company can display at a time of high uncertainty, let's put it that way. The guide, they reaffirm the guide. The stock is higher by more than 3%. That's the stock market story so far this morning. Let's turn to fixed income. Under surveillance this morning, the best bonds in the world.
I think that American bonds are the best buy in the world, that they're going to be even better buy once all of our policies are in place. And this downgrade is something that happened because of the runaway spending of the previous administration. They were the last agency to move, and I don't think it should be a surprise to markets. We support what it takes to get the bill through.
So here's the latest this morning. Traders looking past the latest U.S. credit downgrade and focusing on the tax debate on Capitol Hill. Priya Misra of J.P. Morgan writing, the tax cuts will get extended and the spending cuts won't likely happen. Fiscal term premium should rise more, steeper curve, higher cost of capital to create dispersion in growth and returns. Priya's with us around the table. Priya, good morning.
Good morning.
How much risk is in the so-called risk-free asset?
So it depends on what you define by risk. Credit risk, there is no credit risk. I mean, the U.S. issues fiat currency, we will pay back our debt. The duration risk, which is really a function of term premium, or I don't want to bond geek out here, but risk premium, that's much higher. So you're looking out the curve. There's a lot of risk in those 10-year, 30-year bonds. You look at Japan. So I think if there's a global rise in rates, if we're ignoring, I mean, I think the whole Moody's downgrade, we knew about it. It was lagging, I hear you, but, you know, in the words of Hemingway, you know, how do you go bankrupt? And not that I'm saying that the U.S. is going bankrupt, but you know, it's gradually and then suddenly. And I think, are we at that point where the market says, you know what, we have to look out for fiscal sustainability. Congress is not doing its bit. So the bond market has to force Congress to do its bit. And so I think that's why the long end is scary, because how high do rates have to go before the administration or Congress says, you know what, we don't have the political will, but the market's forcing our hand. I'm not sure what that level is. I don't think the bond market is very beautiful right now. It's in the yippee state. So, you know, that's why I think when you ask about risk, the long end has risk. The front end is being dragged with the long end. That's where I think there's opportunity, because I think, I mean, we're trying to move away from trade, but we're still in that pause. Effective tariff rate is still high. There's uncertainty. I think the Fed will be late, but at some point they're going to cut a lot, you know, more aggressively when they start. So the front end, I like. The long end, that's where that risk comes in.
Let's unpack some of this. You used an important word, global. It's global. What's making it global at the moment?
So some of it is, I think, U.S. rates do tend to drive the rest of the world. I think there's some element of that. We've seen it in other, you look at the taper tantrum. Even when it's a U.S. domestic issue, you do see that impact because investors are global. But the other thing is the rest of the world, if the U.S. is forcing the rest of the world to do more fiscal stimulus, either because of trade, defense, you name which issue, you're going to have a lot more supply in the rest of the world. And then if I'm a foreign investor, I'm Japanese, I can look at the highest Japanese rate, or I can look at the U.S. and say, you know what, I don't even know what's going to happen with the dollar. Maybe the dollar is still overvalued. I'd rather hold the U.S. So I think when it's a global rate rise, it does tend to have more legs, which is why that, to your risk question earlier, that risk in the long end is higher because this is a global bond sell-off, and I wouldn't fade that. I don't think there's a cross-market trade here. I think it's a steepener trade globally.
Well, just to build on that, and something that Ed Yardeni was talking about, how global bond vigilantes are grabbing their pitchforks and marching into the streets and pushing back against some of the fiscal stimulus and just some of the recklessness, as some people would say, that these developed markets have been with their budgets. How much does the risk, if you will, really lie in the developed markets in a new way in sovereign debt markets that totally upends investing logic of the past couple decades?
I think it is a developed market issue. And I think some of this goes back to, if you see how much fiscal stimulus happened during COVID, it was much more in the developed world. Now, it was not as much in Europe, but we're going to get a lot more defense spending, infrastructure spending. But the US spent a lot of money. Part of that exceptional story was the fact that we had significant fiscal expansion. And now I think the market's saying, you know, no mass. What I struggle with is risk assets are ignoring this. So if things slow down, the Fed is telling us actually very clearly that we're not going to be in there quickly. We might be constrained because of inflation risk. Now, the fiscal side's telling you there may not be a lot of fiscal put either. So I think the risk asset complex is a little complacent. But to your point, I think the bond vigilantes are awake. Do they take over? I think it's a bit of a dance between the hard data and the bond vigilantes, and we have to see who wins.
I keep thinking about Ed Yardeni, and he can't decide whether it's going to be a stock market melt up or a bond market meltdown. And it seems like the risks right now are the potential for ongoing growth, also with inflation and fiscal irresponsibility on one side. So the duration risk is the big one, or it becomes a growth scare. And suddenly the credit risk becomes the key component. Are you saying that the credit risk component, the growth scare, is the one that we should prioritize, which will ultimately cure the other side, at least for most of the duration, in terms of where the risk is perceived?
I think that's like the trillion-dollar question here. I mean, the hard data is going to be so muddied by front-loading. Maybe there's still front-loading happening because we're in that pause period. We're in an uncertain period. I do think if I step back and look at fundamentals, I think we're slowing. We've taken that tail risk of recession off the table. But what is our base case? Below-trend growth. And so I do think if you ask me to pick one, I would say the growth side is likely to continue to weaken. We'll be looking at details. Do companies pass on? I mean, this is a consumption tax, ultimately. Whether it's corporates eat it or consumers have to eat it, it's going to start to hurt demand. So I think growth slows down. But to your point, I don't think we can ignore if we get a bill, and it's still not done. The Senate has to work. I mean, I'm focused on the Senate. They don't like even the Medicaid work requirements. So if you get SALT, you get a lot more fiscal stimulus, and we realize it's all front-loaded. Then I think you can get that long end. But there is a self-limiting aspect to that long end. Like, I don't know if it's 4.5%, 5%. I think every other market's going to pay attention to it. The economy is going to slow down because the long end is what actually drives the economy. So there's a limiting aspect. I just don't know if we're there yet. And if the hard data remains muddied and all we get is the soft data, hard data disconnect, you can get the front end being stuck and the long end taking over. I think that's the risk scenario, which is why it's nervous to be in the long end. I think you're supposed to have steepeners. And if you own risk assets, you're supposed to buy that front end because that's the only place where you can have confidence that the Fed can come in and somewhat control.
Priya Misra of JP Morgan Asset Management. Priya, thank you. A lot to think about in fixed income. Your 10-year. Lisa, this morning at least, 446.
A lot of people do believe, just to echo what Priya was saying, the self-limiting factor of some of the increase in the long end, that ultimately at some point you need a response either fiscally or you need a response from the Fed and just to slow down in the economy. That's really the question, though. What is that level? And we just don't know.
The move back in 23 forced corrective action. Ed Yardeni was talking about it. They changed the maturity profile. They reduced duration at Treasury. You can't repeat that act twice, can you?
Well, I mean, you can kind of continue it, but no.
Get the Fed to step in and borrow the bills.
Oof, that's going to be something. Oof.
Coming up next, Joe Amato of Neuberger Berman, former World Bank President David Malpass, Torsten Slok of Apollo, and Dilip Singh of PGIM Fixed Income. Live from New York, this is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turns a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There have been sell America periods or periods of enthusiasm around selling America in the past.
The rest of the world now has other places to invest. We're unwinding globalization.
The global growth picture isn't particularly positive.
I think there is an environment where the U.S. exceptionalism trade can just make a little comeback.
The bill that's about to go through will raise it by trillions more. And at some point, there's a day of reckoning, and that U.S. exceptionalism is tied to that.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
6-day winning run on the S&P 500, live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures pulling back just a little bit on the S&P. We're negative by just 0.2%. On the Nasdaq, we're down by 1/3%. Yesterday, we heard some calls to buy the dip from Max Kettner of HSBC, from Mike Wilson of Morgan Stanley. We asked what dip. Apparently that dip was 1% because we wiped it out pretty quickly yesterday, didn't we?
I thought it was just hilarious. We were kind of almost mocking, almost flippant. This is no dip. We saw a 5% gain last week in the S&P. We saw a 9% gain in the Magnificent Seven. 1%, what is that? Evidently, that's a dip, and it's buyable, which gives you a sense that there is a bias in this market to the better case scenario, not just among investors, but also among corporations who are taking a lot in stride and saying, you know what? This is sort of a temporary thing. We'll figure it out.
That dip was bought and bought very quickly in yesterday's session. Attention's going to turn to this a little bit later on this morning. The president heading down to Capitol Hill to rally the troops, get the Republicans to unite behind his big, beautiful bill.
The Republicans in the House. This is why this is so challenging. It needs to first get out of the Rules Committee at 1 o'clock in the morning on Wednesday, and then Speaker Johnson could put it on the House floor. Will enough be given to the deficit hawks, to the SALT caucus, to those that want to make sure that Medicaid, there's easier access, and they don't want to see some of those restrictions put in place, for all of them to come and vote for this bill? And then it goes to the Senate, which has its whole host of problems. So I know that the president is going there potentially to be the closer on Capitol Hill today, but I think the next few weeks and months he's going to have to make a few more trips on the other side of Pennsylvania Avenue.
I love what Punchbowl talks about, the sort of existential fight for Trump republicanism. And it comes at a time where you have a president who loves debt. He loves the long end. He wants to see that long end, big, beautiful long end, go down. He also wants to see his big, beautiful bill passed. And you have a lot of people who are getting yippy, as Priya Misri was saying, because ultimately something doesn't add up in a way that's making people comfortable. So how do you cross all of these T's at a time where clearly there is great unease? And that, I think, is going to be the really interesting test.
Yeah, yesterday this bond market didn't look so beautiful. This time yesterday. And then by the afternoon, this Treasury Secretary got what he wanted to see, which was lower yields.
Yeah, which is a comforting reality. At the same time, if you take a peek over at Japan, it gives you a sense that maybe not all clear on the global bond vigilante scale, which just shows, look, this is an ongoing concern at a time where, I don't know if they do have Bloomberg terminals over in Washington, D.C., but I highly recommend.
I've seen them.
Okay, all right. There are a couple of different tickers I recommend you check out on a daily basis.
So does Steve Myrick. I mean, he got on the call with reporters yesterday. He has this new paper out. He's going to be joining us in the next hour. He's talking about the tax and spending bill. And he mentioned when reporters were like, do you see what's going on right now on the 10-year and the 30-year? He's like, I don't know about you, but I just checked my screen. We're back to unchanged. So they were just trying to downplay what happened with Moody's and saying, this is just temporary. It's a yip. It's involuntary minimum spasm like you get, I think, in golf games.
USGG 30YR.
Yeah,
Is that what you were thinking?
I actually think that that's the important ticker.
SOVM, good screen too. Just if they won the whole curve.
We should just change it to YIP, go. And I think that would be telling.
The good news this morning, no yips. Yields are up just a single basis point on the 10-year 4.46. Coming up this hour, Joe Amato of Neuberger Berman with stocks threatening to snap a 6-day winning streak. The former World Bank president, David Malpass, will join us with President Trump promoting his tax plan on Capitol Hill. And we'll catch up with Dilip Singh of PGIM Fixed Income as the White House looks to reassure bond markets. We begin this hour with stocks steady following a 6-day winning run. Joe Amato of Neuberger Berman has this to say: talk of a structural change in the global economic ecosystem is premature. Has capital been flowing from the US to other regions recently? It looks that way, but we see that as cyclical rather than structural. Joe joins us now from more. Joe, good morning.
Good morning.
Appreciate the framing, so let's build on some of that framing. I think it's important. Why do you see this as more of a shock to the cycle than a shock to the system, a structural shock?
Well, my comment was more about the question of American exceptionalism, which has been, a hot topic over the last number of months, and is that going to end? And, I think the U.S. has still some very structural advantages in the context of the reserve currency, but there's going to be ebbs and flows of capital flows, and we see capital flowing outside the U.S., and that's one of the reasons why we upgraded global equities, particularly because of developed markets outside the U.S. seeing that benefit of the capital flows outside the U.S. But again, the U.S. still has some long-term structural advantages.
One thing we keep going back to is whether you believe that is a push or pull dynamic. Is that better policies elsewhere or bad policies here? Are we pushing capital or are we pulling it in?
I think clearly the catalyst was the tariff announcements and the overreach that clearly the administration did. So I think when you look at that and you're like, well, wait a minute, you're going to affect U.S. growth, right? If you're going to have higher inflation, lower growth in the U.S., let's think about where there are other opportunities and then look at the relative value of equities, in particular, outside the U.S. versus the U.S. That's what led to a lot of that capital flow.
Not to get too touchy-feely, but a lot of people come on the show and they say they travel around and they see the anger among Canadians. They see the anger amongst Scandinavians that are saying, whatever it is, sell. I don't like what they're doing. It's offensive to us. I don't like the way they're doing it. We're going to cut our exposure. Are you saying that that emotional response is in a small subset, that it's short-lived, that you could see some sort of knee-jerk feeling right now, but that longer-term profits will ultimately rule the day? What's your interpretation of that?
I happened to be in Canada on April 9th. And so it was an interesting couple of days visiting with our clients up there, and I think there was real frustration and confusion, really, was I think the better word. But, I think that economics are still going to rule the day, right? So while you may get emotional, the Canadians are very good long-term investors, right? Their pension system is a fantastic pension system. So, I don't think they're going to get too caught up in the day-to-day emotion.
There is also this idea of redefining American exceptionalism, that once it was in the bond market and the currency market, and now it seems to be transforming into an equity play more than anything else, particularly with tech dominance, really leaning on some of the big tech names. Do you see that as happening, that you could see a divergence with ongoing questions around American exceptionalism and debt and currency, while still seeing a pretty steady equity market?
Well, I think that exceptionalism really is driven by the innovation culture we've got here, and is not just tech. Because if you look at companies in the industrial sector, financial sector, other sectors, they're driving forward in innovation, using technology certainly as a tool for that. And I think that gives the U.S. economy a really long-term, significant competitive advantage in that ecosystem that's been built up over decades and decades and decades, right? We treat capital well in the U.S. and reward innovators, where that's not necessarily the case in a lot of other parts of the world.
That's why it attracted a higher multiple in this market versus the rest of the world.
Yeah.
Has that story changed, given everything you just said a little bit earlier?
Well, interesting. If you look at the relative multiples, let's say Europe versus the U.S., in tech, they're valued about the same. The tech sector in Europe and the tech sector in the U.S. is valued in the high 20s multiple. But you see a premium multiple in many other sectors in the U.S. versus Europe, because those companies have adopted that innovation and technology that's going to lead them to a higher level of growth, even if you're manufacturing goods or automobiles or what have you.
There's another way, just to build on what John was asking. how much do yields where they are and this question around some of the debt sustainability start to constrain multiples in a way that is, despite that innovation? So you could see sort of a cap on how much you could gain in U.S. equities, regardless of that innovative spirit.
Yeah, I mean, we're certainly looking very closely at the bond market, right? That's what drove the policy change on April 9th, the weakness in the bond market, and the administration should be very focused on that. And from an equity investor standpoint, you know, the foundation of risk assets is in many respects the 10-year, because you price your risk assets off of that, and looking at that closely is something that I think is going to drive equity multiples. You see the 10-year approach 5%. I think that starts to bite into where multiples are in the U.S.
When you talk about this bumpy road, unpredictable future because of tariffs, do you feel like a lot of the uncertainty has been put back in the bottle? Because the president has come out and had a détente with China and said, basically, we will be lowering rates, even if we're not in active negotiations right now in some countries.
Well, I think from a tariff standpoint, in some respects, the left tail risk has been reduced because of the China agreement of a weekend or two ago. But you still have an enormous increase in the tariff rates versus where we were just a short while ago. So that's going to have its impact on U.S. economic growth in our view. So, yeah, I don't think we've seen the end of this. I think that seeing how companies are impacted, you're going to see a bunch of retailers report this week, and you're going to start to see a little bit of maybe the early stage effects, but it's probably more so as you get into the third quarter. And it's something that we're still worried about. And I think right now, equity markets, you're going to be in a trading range, right? We had a strong bounce back based on a bit of good news with tariffs. You had hard data hang in there, so the resiliency was strong, even though soft data is sort of all over the place. But I think that's led this 20% plus bounce off the bottom. But I think right now you're going to be in a trading range until you see really greater clarity in the second and third quarters.
We've been trying to define risk all morning, and Ed Yardeni was talking about how he sees both the risk of a melt-up in